21 session. Okay, once again, good morning. How are you all? Good. Okay. So I'm meeting you first time. Last week you had a inaugural. Yesterday only, first class. Okay, good. So before that, last week you had some orientation classes. Due to some reason, I could not attend that. I was not able to meet you that time. Okay. So myself, Dr. Muthu. Okay. I teach accounting and finance courses. So we are supposed to meet each other for the next some 6 classes to transact a course called Accounting for Managers. Okay. I understand you are all working in some other companies. Okay, you are all executives. You are already there in the industry or market, I can say. Due to some upgradation of your qualifications or any higher studies, you are here. Okay, so this MBA program is of complex in nature. I mean, combination of all the domain. It's not just particular aspect. It's about engineering, it's about science, it's about everything. But what we study here is management, but what and all you are going to apply this in different areas. You may be in service industry, you may be there in manufacturing companies, or you may be in some other trading companies. Okay, altogether a different industry you may be there. But this management is everywhere in all the part of the, business or in the industry. So you're going to study a variety of courses in this particular program. Okay. One among them is Accounting for Manager, a basic course. Though you are not going to be an accountant, definitely I'm sure you are not going to be an accountant unless otherwise you already have some kind of professional qualification in accounting. Okay, you are going to be in some of the other areas, but you should know something about the finance and accounting. Being an executive, being a businessman, or being an executive in a business, 2 possibilities. You yourself can be a businessman, you can run your own, or you can help others, those who are doing that job of running a business. Okay, you are an executive there, you are just working there. Okay, so in both the cases, we are supposed to know certain things about the finance or accounting. So with that background, this course is there in your program called Executive MBA. So not to create you as an accountant, or not to create you as a professional only in accounting. Okay, you may be taking some of your specialization in finance. I accept, I do understand. You may be taking your specialization in finance. So there, to understand the concepts clearly and go in deeper in finance, you should have some basic idea about the accounting. So that is a background. That's a framework. There's a logic behind this compulsion for all of you to go through this particular course called Accounting for Managers. Okay, is that clear for all of you? So suppose you are a pilot. Okay, you should know some kind of problem is there, means you have to bring the aircraft safely to the land, safely to the particular place where it can be further repaired. You are flying, okay, you are a pilot. You should have some kind of mechanism. You are not a mechanic of a pilot, of an aircraft. You need not to be. But if there is any problem, arises, you should be in a position to safely land that particular aircraft in a particular place where we can go further to repair it or to further things. So you are in that stage now. You are just like a pilot. Don't think that you are going to be a mechanic of that particular aircraft. It is not the idea. Okay. So I hope you are able to connect the comparison what I am trying to tell you. But anyway, this course is comprising of 5 modules. We have a short duration of time. Okay, everything is to be done very quickly. Okay, you don't have time much. You are coming only in the Saturdays and Sundays, and we have to do it very quickly and very, briefly also. But at the same time, without losing the essence of the course which you are supposed to be having it in your mind. Okay, so five modules are there. 5 modules. One is basically about introduction to accounting. Okay, any subject, any course, if you take some basic, you have to understand. So introduction to accounting. Another one is how these companies are preparing some financial statement. I hope many of you may be engineers, right? Anybody already knows account? I mean, already trained in accounting in your UG courses? Only one? Okay, few of you are there too. BCom, BBA, few of you are there. Okay, others are maybe engineers or science background. Okay, forget about all those things now. You are now in a class of accounting for management. Slowly we can enter into the aspect of accounting. So second module is about preparation of some statement of financial reporting. You might have seen in the newspaper or in the website of the same company, your own company. Their annual reports will be there. In the annual report, one of the components will be financial statements. So after understanding the basics of accounting, we will move on to the preparation of accounting statement, preparation of financial statement. Then after that, we have to analyze the financial statement. We'll learn how to analyze the financial statement. That only gives you more scope in the market. As an executive or as an MBA, okay, as an analyst, you can have more scope in that market. Okay, that is called financial statement analysis. Basic about accounting, then preparation of financial statement. Then we are moving on to analyzing the financial statement. In analyzing, we have so many tools to analyze. Okay, we'll see one by one. Not all the tools, very important tools, one or two, mainly ratio analysis, and another one is cash flow analysis. These two tools we are going to study here in the umbrella of financial statement analysis. So after that, we move on to the last part of this particular course called cost accounting. Basically, there are three academic classification of accounting. Academically, we classify this for our own convenience. We can't dump everything in a single day or in a single semester. So we academicians have classified the entire accounting into three: financial accounting, management accounting, cost accounting. We'll slowly come into this. Okay, just an idea I'll give you for 30 seconds. So financial accounting talks about preparation of the financial statement. Management accounting talks about analyzing such statements in order to get some kind of input or insight about the company to make further decision about in the company. And last one, cost accounting. Cost accounting deals with how do we fix the price of a product or a service. It helps us to determine the price of a product or service. If I want to sell this particular product, I should know the cost of this. How much I spend on this to make it. Then I will add some money or some value to this for my own effort of making this profit. Then I'll bring it to the market. I will say this is the price of this particular product. Then market will say the dictation to me if it's a consumer-oriented market. Okay. No, sir, this is available for another price in the nearby company. They'll go for that. Then I'll adjust my cost and I will do so many items in that particular product. Okay. So that is study about that is called cost accounting. Okay. So it's only academic classification. Academically, we have these three stages. But here in MBA, we have to study all these things together, one after another. Okay, that's what the last part is, cost accounting. Okay. So in these three areas, we are going to touch upon few of the concepts, not all. In financial accounting, we have a lot of things. Okay, we are not going to study all those things. Based on some kind of logic, we derive these 5 modules. Okay, introduction to accounting, preparation of financial statement, analysis. One is ratio analysis, second one is cash flow analysis, last one is cost accounting. So this is the course plan, or you can say the course outline. Okay, this will be available in your LMS. You can see it later. Okay. This is what I told you just now. Introduction to accounting. Second module and first module both similar. Okay. Third module is preparation of financial statement, then analysis. The last one is cost accounting. Okay. So these are all the concepts which we are going to study. Okay. So to just start with, what is business actually? Yes, please. What do you understand by the term business? Sorry, sir? Making profit is business. If any business it is making loss, would you not accept that as a business? What is business then? Making a product or selling product or services. If there is an organization which is making, yeah, if you make, you have to sell it. Okay. His understanding is selling a product or service can be called as business. Business is nothing but an organization or any economic activity which involves selling of something. That thing may be a object or it can be a service as well. Okay. So we all know that, we are all into that, or we are all seeing in our everyday life business. You are all in some of the companies, you are working for them, working for the business. Okay. So if that is a business, how can we own a business? What are the different forms in which we can run a business? Any idea? Business, understood. Okay, doing an economic activity for the purpose of, for the intention of making profit. Intention is making profit. Outcome, it may be profit or it can be loss also. Okay, we'll come to that. How do we calculate profit? That's what the purpose of accounting, the financial accounting. Okay, then how we are doing it, we are analyzing it, that's management accounting. Okay, how do we fix the price for our product? Cost accounting. Fine. So if that is the business, there are so many business ownership, right? Okay, ownership. What do you mean by ownership? How do I form my business? How do I own my business? What are the ways in which we can own a business? Sole proprietorship. Sir, I am going to start a particular business. I am going to invest my own money. I may employ somebody. I will give salary for them, but I don't take money from anybody else as giving the ownership in my business. I don't give ownership in my business. The sole authority, the sole ownership is with me only. If I need 100 crores money to start my business, all the 100 crores I am investing, or I have to, I have 50 crores, 50 crores I'm taking a loan from some of them, some outsiders, or from some institutes. We have in economy, we have so many institutes we call bank. Okay, that organization, that model, that ownership pattern of business is called as sole proprietorship. Sole proprietorship or sole trading concern. Okay, any confusion in this? Engineers. Okay. Next, sir, I need 100 crore, but I have only 50 crore. Nobody is ready to give money as a loan to me. I'm introducing a term called loan. Accounting term, but we all colloquially use in our life also. Loan. What is loan? It's simple understanding. What is loan? I take some money from somebody with an obligation of paying it back later. Loan, right? So nobody is nobody is ready to give me loan. But some of my friends are ready. They're giving money, but they are asking, I will also take ownership in this business. So that is called partnership business. We are not touching more on this, just a passing reference. Okay. Second way of owning a business is in the mode of partnership firm, partnership organization. Okay. Third model, third ownership pattern. Yes. Another way in which I can own a business. One second. This is the one second. This is having a point to understand. Franchisee. Sir, what do you mean by franchisee? Is franchisee giving you a share in the business? What is franchisee actually? There is called natural. Some hair salon is there. Be in naturals. Some, yeah. Which one, sir? Yeah. So we have seen the board. Okay. Naturals. KFC for that matter. Okay. So what they are doing actually? That's it. You are not taking part in that company. You are not taking any ownership in the company. What they are doing, you are going to start your own business by just using their brand name. For that, you are paying something. They are helping you to establish yourself with their brand name. Of course, this is outside accounting, but you will study in other subjects. But how do you own franchisee business? Again, it can be in the form of sole proprietorship or in the form of partnership. Franchisee is not a form of ownership. Franchisee is a business model that I can start with. Franchisee. Sir, I am interested in beauty parlor, to do a business of beauty parlor, but I don't know how it can be done. Okay, I am interested in doing a hotel, restaurant, but I don't know, previous experience I don't have. I don't know how it can be done. So I need somebody else support. For that support, I want to remunerate them. And there is an organization which is already established in that particular business. They want to establish that pan India, but they don't have resources to do that. So they seek the people who are interested in that kind of business. Okay, so that model is franchisee. That again, who is going to start? It is me along with my friend, or I am alone. So that's again, business is going to be a partnership or a sole proprietorship. Yes, sir, you are trying to say something.
Yeah.
Investing
Hello?
in the shares of any of the industries. What is industry? Industry is collection of companies. Actually, industry means group of companies doing the same business activities. Banking industry. Okay. Insurance industry, IT industry, educational industry. So industry is group of companies. So we can change the word to company. Investing in the shares of some of the company. Okay, that is one possibility. Similar kind, extension of partnership only is a company. Basically, if you see, there is a restriction for number of people can be in a partnership. Number of people is restricted, maximum number is there. But company, if you go with company, there is no restriction for a public limited company. I'll just come to this little later. Two more models we have, two more business organizations. Hindu undivided family. Not just a joint family business. Family business is not I'm talking about. Family business, again, it can be a partnership or it can be a sole proprietorship or it can be a company as well. That is again not a form of business organization. That's only usage. Myself, my wife, my father, my mother, okay, and other fellow members of my family, we join together and we may either start a partnership or we may start a company. I'm not talking about that family businesses. Hindu undivided family means there is an ancestral business, ancestral property, okay, and undivided property is there, undivided property. It's not common in South. It may be in Odisha or West Bengal, some kind of businesses may be there in this form. Legally, it is a Hindu undivided family. Family should be a Hindu family. There should be a business. There should be undivided properties. They can have a business ownership in that way. Okay. Then another one is cooperative form of business organization. Artisans, weavers. Okay. Some people like this, those are doing a similar work, mainly artistic work. They join together, they form an organization. Okay. They work for the organization and they are the owners. They are the worker. They will make products and they will sell it in the market in the name of cooperative society. That's another form of business organization. Among these all business organizations.
Hello, sir.
Yes, sir.
Yeah. What is the difference between cooperative business and a partnership business?
Okay. So partnership business is something unknown. I mean, I'm not working. I'm not an artisan. I'm not a person who is making something. I'm just an expert. I want to do a business. Then I am entering into an agreement with another person. Those are having a similar mindset, and we are doing a business. Okay, businessman purely. Cooperative organization will be, suppose like a carpenter is there, or a weaver. 20 weavers joining together instead of doing a same work alone, bargaining capacity is going to be increasing if they are in a group. Okay, even government will give some kind of subsidy for those people if it is in a group. Yeah, milk societies are there. Okay, all the milk producer farmers, they can join together and they can start a cooperative society. Cooperative society is similar to a company, but not exactly a company. What is the difference between partnership, so I mean cooperative and company? In simple point, cooperative is just opened for the purpose of getting a collective benefit, collective interest. If I alone have some 10 cows or buffaloes and I'm just producing milk, my bargaining capacity, my role in the market may be less. If I go with a group, an organization, that time I may have some kind of advantage, edge over other small farmers or individual farmers. Okay, here also they are contributing money, capital. I'm introducing a word called capital. Okay, capital. Capital is an accounting term. I'm so sorry. Accounting term. Okay, we'll discuss about all those things when we come to accounting in another 5 minutes. Okay, so they'll invest the money and they'll start small form of cooperative form, and they will start business and do it. Company form, it's having so much bigger organization. Anybody. So as he told, I am in Bangalore. I can invest my money in one of the company which is going to be started in Mumbai or in Mysore or any part of the world nowadays. Okay, so that's the difference. Joint stock company. Company means joint stock company. Okay, cooperative form and partnership. Partnership is a very small organization within one village or within one particular town. Only known people will join together. Okay, but in cooperative form, of course, known people, but they are all doing a same business. They are doing the work. They are not just the owners. They are only doing the work. Okay, example: carpenter, weavers, farmers, all these things. Okay, let us not go much in detail. You'll study in some other subject if entrepreneurship or anything is there. So understand now, there are so many different forms of business ownership in this world. That's the point I want to tell you. 5 forms. Among these five forms, company form of business organization is dominating in the economy because of its large scale operation. Large scale operation. It can reach out to any part of this world. We are the witnesses. Okay, the company which is in USA may be marketing this product all over the world. A company which is in India can market its product all over the world. If you are a small individual doing a business on sole proprietorship or partnership or cooperative firm or HEF, these 4 organizations are not able to reach out that much bigger level. So we all interested in knowing about how a company keeps up its accounts. Accounting is common for all the 5 forms of business organization. Only these 5 forms we can have a business. Nothing more than that in this world. Only these 5 forms. If you start any business in any model, that should fall under any one of these 5 categories. Okay, if that is the case, accounting is common for all. Accounting, the basic, what is accounting, the rule, regulations, okay, the other principles, we say it's principle. All the principles are same, but it takes its own way depending upon the nature of the business ownership. The legal framework comes into picture more in the company form of organization. What is a company? What is a company? A joint stock company or corporation or just company. If I say company, there should be a meaning for that, no? What is a company? Any business organization owned by the people who contributes money in the name of share capital. Engineers, please understand. What is capital? Capital means the money invested in the business. Who can invest the money in the business? The owner. Simply, we can call them as owner. In partnership, he can be called partner. In cooperative organization, he can be called as member. In sole trading organization, just owner or sole trader or proprietor. Okay, and then in HEF, we call it as co-members, all of them, co-partners, all. Okay, but in company form of organization, we call them as shareholder. Any business organization that is registered under Indian Companies Act 2013 can be called as company. In our colloquial language, we can say, I'm just going to my friend's company. That need not to be actually a company as per this definition. What is the definition I told you? Any business or any organization, not even business organization, any organization which is registered under Companies Act 2013. Sir, I started my business 2012. So can't I be called as a company? Yes, you are company. So we are adding the definition. Any organization registered under Indian Companies Act 2013 or earlier enactments which were there in the previous days. From the British period, we have so many enactments. You know, we are subject to changes, modifications, alterations. Every day, life is keep on changing. Economy is changing, environment is changing. So legal provisions also should get updated, should be capable enough to govern the latest business model. So Companies Act was amended and it was fully revamped in the 2013. So any business organization or any organization that gets registered under Indian Companies Act 2013 or earlier act can be called as company. Who is giving the registration? Companies Act is a book only, no? Act is nothing but a book. Then who is going to enforce that? Each and every state, there will be a person called Registrar of Companies, ROC. That ROC is the point of contact. Those who are willing to start a business in company form of organization should go and approach, and legal formalities, everything done. If he is getting satisfied, that office will give you the certificate of incorporation. On getting the certificate of incorporation, you become a company. That's a birth certificate. Okay, let us stop this discussion up to this. Now come to accounting. So I am investing money, irrespective of the business, investment is there. Irrespective of the ownership of the business, money comes to the business, right? Irrespective of the business ownership, money comes to the business. The money comes to the business from the owner is called as capital. Suppose I am borrowing money, that is also called capital. That is a borrowed capital. This is owned capital. Are you able to understand? Capital is nothing but the money used in the business, money invested in the business. Resources invested in the business is called as capital. Clear? Okay. Irrespective of the business ownership, money is invested. Okay. If I borrow money, the business is using money. 100 crores is the total money used in the business. 50 crore I have given as a owner. 50 crore I have taken the loan from the bank. That second 50 crore is called as borrowed capital. Debt capital, debt, loan capital. Okay, normally we say borrowed capital, debt capital. The money invested by the owner is called as owned capital. The another word for owned capital is equity. Equity. Okay. Loan is nothing but debt. So equity and debt put together is total capital of the company, total capital of the business. Is it clear, first of all? Right. Suppose if I start a business as a sole trading organization, I have brought money, 50 lakhs. Now 50 lakhs hot cash I'm keeping on the table. I'm starting a business. I'm doing it for some period of time. At one point in time, I should be knowing about what was my performance. Suppose if I'm talking to you like this every week, the next 52 weeks, 1 year, I'm talking like this. Finally, there is no meaning. I have to capture whether you understand something from my delivery or not, or is it useful for you? Is it really meaning something? You have to check. For that only we are having assessment. In a college or a university, we have assessment, test we are having. Okay, so that kind of thing you have to check in the business also. What is that? How do you assess the business? Auditing is to assess the business. What is auditing? Auditing is, what is auditing? We are completely not having anything on auditing, but since you raised that point, just 1 second, I mean 30 seconds, we can just touch upon that. What is auditing? Verifying. Why you are cross verifying? Directly verifying. Okay, verifying the books of accounts. Whatever I have done is right or wrong, right or not, correct or not, not even right or not, actually, to check whether it is correct. That's it. Auditing. We are not doing auditing. We are not subject to do auditing. We do everything correct. Somebody can come and check it whether we are right or not. That's it. Auditing. Then how do we assess a business? The students are assessed by the teacher by giving exams, assignment or test or exam. Like that, how do we assess the business?
Balance sheet.
Sorry? Directly you are jumping into the statement.
Quarterly financial report.
Understand a business, we have to assess the business by knowing the profit or loss. Performance of a business can be translated into another words, that is profit or loss. So business can be assessed by knowing its profit or loss. Okay, just like your performance is assessed by marks, attendance percentage, how are you getting placed. So these three things we can take as a parameter for assessing your performance, our students' performance. Similarly, the performance of a business can be assessed by knowing the profit or loss. Okay, since we touched upon this concept, profit or loss, what is profit? What is profit?
Earning over the spending.
The amount gained from the
business.
Okay, one of
Or
your
an
classmates in the class is telling the amount gained from the process of selling a product or service is called profit. Okay, anybody else? You are many mathematicians are there, many engineers are there, no?
It's how much you earn after all you
Capital
spend for the
minus
business.
Capital minus expenses and tax.
oh madam. Suppose I am starting a business by investing a capital of 1 lakh today morning. Okay, I just paid some 2,000 rupees for the servant whom I employed in my company. So 1 lakh minus 2,000 is equal to 98,000. So is that a profit? One second, let us clarify this. Yeah.
Capital minus
Okay.
expenses.
Total expenditure in my case only 2,000 rupees. I appointed a servant. I paid 2,000 rupees salary for 1 day. Yeah. Now. I did not do anything. I'll come to you. I bought some goods for rupees 98,000. 2,000. I brought morning 1 lakh rupee. I appointed one person by giving an advance salary of 2,000 rupees for that particular day. 1 day salary 2,000 daily wage. Remaining 98,000 was there with me. I just went to a shop. I bought some goods, intending to sell it in my outlet. So now what is the profit? One second. Think. You told capital minus
Not
expenditure.
capital.
How much is there with me now?
Not capital, but
this
maybe
example?
total. Maybe total
Zero.
sales.
Mathematically zero, right? 1 lakh I had hot cash. 2,000 I paid to my servant, worker. 98,000 I paid for the supplier to buy goods. Now what is my profit?
But profit
Zero.
comes
As
after
per that
selling.
definition, as per that
Zero.
equation, zero.
Margin amount.
Okay, forget about this. Think little more easier. Don't confuse, don't get it complex. What is profit actually? Suppose I am buying this pen for 2 rupees. I am giving it to you by collecting 3 rupees. What is my profit? How did you calculate?
Cost
1
price
rupee.
minus selling price.
Why you bring that investment and all? Investment is permanent in nature. That's it. Little more simplification. Revenue minus buying price. There are 3 words are there. Revenue, 4 words are the revenue minus buying then price. Why don't we simplify this into 2-3 words? Selling, you are just again going into the revenue. Revenue is a broader term. One second. One of the component of revenue can be money collected from sales. Revenue is a broader term, right? Revenue is a broader term. My revenue. Sunday, I'm just sacrificing my Sunday. I'm coming here. I'm talking to you. Why? I'm getting my revenue. This is not only my revenue. Other days I may be in some other place, some other work I may do. So revenue is a gross of what we are getting. Sales is not net. Sales is one of the component of revenue. If you already brought revenue into picture, then why again going to one by one? We will discuss what are the components of revenue after deciding what is profit. Revenue minus what you told, revenue minus buying price. But buying price is not the only. Now my come to my example. Those who are online, please understand. Come to my example. 98,000 rupees I bought goods. I sold it for 1,05,000. What is my profit?
7,000.
7,000 is my profit. But already I paid 2,000 rupees to my servant as. Sir, now what is my profit?
Wages of 5,000.
5,000. How are you all arriving this? Simple mathematics now.
Margin amount.
Revenue
Sir.
minus not just buying price. If it is only buying price means I have to minus only 98,000 in my example. But I minus 98,000 as well as 2,000 also. So buying price
Revenue
plus
minus
other expenditure
capital
put together, what
investment.
we can call
Revenue minus
cost. That's
capital
it.
investment.
Cost. If you say cost of the product, then again where the place you are keeping the cost,
Expense.
where the what are the supporting you need for selling that product or buying the product, everything comes into picture. So only two variable we bring it here mathematically. Profit is equal to just an equation. Profit is equal to revenue minus income minus expenditure. Simple. Income minus expenditure. Income minus expenditure is equal to. One second, I'll take you to that particular slide. Yeah. This contains a lot of concepts. You can read it later. Now we understand the basic, then only you can get interest in the accounting. Otherwise, you will think that, okay, accounting is not my cup of tea. It is only for BCom student. Yeah. So in this, we'll add one more, that is profit is equal to income minus expenditure. Any doubt in this actually? Is there any other thinking? Sir, it is not so. It may be something else. This defines what is profit. Our job is to identify what are all the items to be included in income as well as in expenditure, and to arrive at the excess of income over expenditure. If I arrive at excess of income over expenditure, that is called as profit in accounting. If it is in minus, if it is in negative, then it can be called as loss. The business has incurred a loss. Okay, sir, I keep on spending, I keep on earning income. What is the stage? When should I apply this break? This equation, I have to check. Can I check it daily? Can I check it fortnightly? Can I check it every week? Or can I check it once in a month? That's becoming a question. That is what we call it as accounting period concept. We have some rules and regulations, I told you, some concepts. I'll come to that little later. I'll tell this equation and we can go to directly after getting the concept set. Okay. So when you can apply this equation, when you can stop the business, not really or physically, accounting point of view, stop it and take a calculation. How much profit I have? Yearly once we will do normally. If I want to have a regular checkups, regular assessment, sir, year is too long. Okay, Manmohan Singh was talking about the demonetization in the parliament. Long run, all are dead. That was a statement he was giving for a demonetization. Long run, all are dead. If we take that into consideration, of course, long run. So what about today? After 365 days, your company is going to be good. Okay, fine, let it be. But what about today? I want to check very frequently. How frequently I can check? Normally, companies will do it once in 3 months. Quarterly, you might have seen in the newspaper, quarterly financial statement, unaudited quarterly financial statement will be there in the company's website or in the newspaper. To just give a pulse about the company to the stakeholders. One of the stakeholders is shareholder. Investor may be both. Shareholder also investor. Bondholder is also investor. Who is a bondholder? Who has given loan to the company in the form of a security. Okay, so to give a pulse about the company's performance, I will do that once in 3 months. Okay, fine. Now, profit or loss is known to us. That's one objective of accounting, to know the performance of the company. What is the performance? Performance can be renamed or it can be taken in another words called profit or loss. That we are already clear about it. We'll come to know what are the items to be taken into the point of headings of income or revenue, what all to be included in expenditure, then mathematics, simple mathematics. Total expenditure is minus from total income. It reveals a profit or loss. Is it clear? Right. Next, look at this equation. Resources are equal to claims. This is the very, very peculiar nature of accounting. You will have a confusion here if you are a non-accounting student. Let me make it very clear. Resources are equal to claims. We follow a system in accounting, double entry bookkeeping system. Double entry, okay, bookkeeping system. Why it is like that, or what is double entry bookkeeping system? If you bring money to the business, you and your business is separate from each other. That concept we follow in accounting. Businessman is separate from. You may wonder, sir, what is this business? His own business. Why you are saying businessman is different from his own business. Take my own example. I brought 1 lakh rupee in the morning and I'm starting a business. I'm keeping on the table 1 lakh rupee. Now that 1 lakh rupee, if I say I started a business, that 1 lakh rupee belongs to whom? Business. It's not my money.
Yeah.
It was my money at 9:59. 10 o'clock, I just told I am starting a business with 1 lakh rupee. What business?
So
That is left to you. It can be a partnership, it can be a sole trading organization, it can be a company, it can be a chief, it can be cooperative. That left to you. And what nature of business you are going to do? Sir, buying and selling, trading. Buying and selling is called trading. Sir, I'm going to manufacture something and selling. Production or manufacturing business. Sir, I neither produce anything nor sell anything. I'm going to render a service. You are a service industry, service business. That is left to you. Business idea. That's coming from business idea. Okay. So keeping this aside, I brought 1 lakh rupee. I start a business. I started a business. Now this 1 lakh rupee belongs to business. That is the resources of the business. What name we can give that resource now? Hot cash. Cash in hand. Whose hand? Hands of the business. Okay. So that is what we call it as resources.
Yes.
Look at the slide. Resources. Those are online. Are you able to see the slide changing? They are
Yes,
in the
sir.
Yes,
accounting
sir.
equation slide.
Yes,
Visible-
sir.
Visible to you?
Yes, sir.
Yes, sir.
Any response from the online student?
Yes, sir.
So we can see the screen.
Am I
It's
audible to
clear.
you?
Yes,
Yes,
Yes, sir.
yes.
Very much.
Sir, yes.
Anything problem?
No, no. No, sir.
Sorry?
You're loud and clear,
I think I
sir.
asked the wrong question the wrong time. Anybody? Those who are online? Can you hear me?
yes, sir.
Yes,
Yes,
sir.
sir.
Sir, we
Yes,
can
sir.
hear
Yes,
you, sir.
sir, loud and clear, sir.
I
Can
think
you hear us, sir?
Anybody can put a message? Yes, okay. Thank you, thank you. I think we are not able to hear you. We'll check it. All right. So resources are nothing but the various values that are in the hands of the business. Now, only just we started a business, 1 lakh rupee is there in the business in the name of cash. Resources broader term. Resources may be in several form. Now it is in the form of cash. Suppose I took 10,000 rupees from that 1 lakh rupee. Who I means what? The businessman or the accountant of the business or the cashier of the business or manager of the business. He is going to HDFC bank and opening a bank account, current account. In today's world, everybody is telling not even use any hot cash. You have to use on transfer only through banks system, through system. Government wants to capture everything. Okay. Of course, business we have to have some evidence also. Later we cannot say I did not take money, or he should not say I did not take money from you. Evidence. So I'm opening a bank account. Bank account is necessary for doing a business. I'm opening a bank account by depositing 10,000 rupees. Now my resources, anything change in resources? 1 lakh remains the same. The resource, the total resource of the business is same, 1 lakh. But that 1 lakh is not in the form of ready cash. It is in the form of ready cash only 90,000 rupees. 10,000 rupees is in the bank. So accountant, what they will do is they will name some account. They will bring some name for different account heads for the purpose of accumulating our equation called revenue is revenue minus expenditure. We will name some account. We will our convenience want to classify the entire activity into different category. We will name it. So cash in hand is how much? 90,000. Cash at the bank is 10,000. Okay. Then look at this equation opposite side. Claims. What is this claim? This 1 lakh rupee belongs to whom? 1 lakh rupee is possessed by the bank, possessed by the business. But originally this money belongs to whom? If the business is closed today,
Owners.
just I opened a business in the morning, 9 o'clock, I opened a bank account, 90,000. Later on, I discussed with somebody, they told, so this is not a good business to do with. So I changed my mind, I'm closing my business. Now this total resource of the business is 1 lakh. This need to be given to whom? If the business is closed, this money is to be going to owner of the business. So owner is having a claim in the business. So always at any given point in time, according to accounting, the total of the resources of the business should be equal to the total value of the claims of anybody. In this example, it is a claim of owner. Take an example. Further, we are moving on. Tomorrow, I did not close the business today. Tomorrow, I found a good opportunity, but with 1 lakh rupee, I'm not able to do this business. I'm going to borrow money from a bank or from my friend. You may ask a question, sir, how the bank will give immediately loan? Okay. I'm borrowing from my friend. 1 lakh rupee, I'm taking from my friend. Now, what is the total resources? 2 lakhs. Can you name the different subcomponent of the resources? Cash in hand, how much? 1,90,000. Very good. Cash at bank is 10,000. Total it is equal to 2 lakh resources. Now, tomorrow, today evening, I'm closing the business. Assume just to understand the concept. I'm closing business. Now the claim, total claim is how much? Same 2 lakh. Because the equation says value of claim should be equal to value of resources. So 2 is equal to 2. But in this side, claim, it is not only single claim, it is 2 claims. One claim is 1 lakh, that is claimed by the owner. Another 1 lakh is claimed by friend is your own word, but accountingly we have to say
Partner.
is he a borrower? You are very good. You are borrowing something from somebody and you are telling he is a borrower.
Investor.
Meaning you take 1 lakh from your friend, you are a good friend. You are taking 1 lakh from your friend and you are asking him, give me 1 lakh further to settle this 1 lakh. What is this? Because you don't know the term, that's why you're telling you are not that
Loan.
character. Okay, fine. 1 lakh who has given is called
Investor.
lender. Normal term, lender. But in accounting, we call them as creditor. Creditor. So the claim of 2 lakh rupee, 1 lakh is for owner, 1 lakh is for creditor. Okay, since we touched upon the term creditor, I will tell you one more point in that. Now your friend has given you hot cash of 1 lakh or check of 1 lakh rupee. You are going to one of the vendor nearby and you are introducing yourself. So this is my card. This is my business organization. Just now I started. I want to buy some supplies from you, buy some goods from you so that I can sell to my customer. Can you give me the goods? Yes, we are there for selling only, take. You are taking 5 lakh worth of goods. You are invoicing it. And then you are telling, sir, I'm so sorry. I have only 2 lakh rupees with me. That also 10,000 I opened a bank account. Only 190 is there with me. I will give you next month after selling everything. Give me 1 month time to settle your 5 lakh rupees of invoice money. You are taking the goods and you are telling him a promise. I will give you later, sir. Now he is also your creditor. He is a supplier basically, supplier of goods. Since you did not settle the money on the day of supply, he becomes a creditor. He is having a claim against you. Against you means your business. Against the business for how much? 5 lakhs. He is also a creditor. But what is the difference between your friend and this creditor? Your friend has given hot cash. Hot cash means it can be a cash or can be a bank account. Transfer or check, DD, not a problem. He has given money. But this fellow has given product, goods, supplies, merchandise. Okay, so both are called as, both are having a claim against the business. Your friend is having a claim against the business of 1 lakh rupee since he has given 1 lakh rupee to you. This fellow, this company is also going to be a claimant of your business for rupees 5 lakhs. But there should be a difference between these two people in usage. Both are broadly called as creditor only. Your friend is called as financial creditor since you've taken money from him. Colloquial word, no, can you finance? I'm going to buy a car. Is it available for finance? You're asking. The same logic. Financing. Yes, he's giving money. Okay, this person or this company from whom you taken goods for 5 lakh rupee is called as trade creditors. Because of trade relationship, he is giving you the supply. He is giving you the goods. Okay. So now you tell me finally, how much the claim in total claim in this business? After buying 5 lakh rupees worth of goods from this fellow, what is the total claim of this business?
7 lakhs?
7 lakh. Can you tell the individual component of the 7 lakh? 1 lakh is capital to the owner.
Capital. Yeah.
Another 1 lakh is loan to the financial
Loan.
creditor.
Financial
Another 5 lakh is to the supplier,
creditor.
trade creditors. So you see, within 1 or 2 days, it's going like this. If you take an example of a real time and you have lot of things to do in a business, so that takes us a lot of activity. So all these activity we put together in accounting, we call it as transaction. Opening a bank account is a transaction. Bringing money by the owner from his own asset to the business is a transaction. Taking goods from the supplier, either for cash or for credit or for promise, is also a transaction. Taking loan from a friend is a transaction. If I give back the money to the owner, I mean the creditor, it's again transaction. So transaction means any economic activity that occurs in the business. Okay. Now look at the side, resources side. In the same example, last up to the last, what are the resources available in the business? Cash in hand, how much? Totally 7 lakh. Accepted.
1 lakh.
Totally 7 lakh. So the classification of that is cash in hand, how much? 1 lakh,
1 lakh.
90,000. Cash at bank, 10,000. And one more. What is that? What is that?
5 lakh rupees product.
Trade creditor is a resource or a claim?
Trade.
Trade
It's a
resource,
claim.
trade creditor claim. Then why are you telling here? Goods. Because he handed over some item to me, some goods to me, he becomes a trade creditor for me. This is what we call it as a dual aspect concept. Look at this. You just borrowed, I mean, you just taken goods from supplier. That's it. Transaction is only one. What is the transaction? Buying goods from Chandan Limited, Chandan Company for credit. What is mean for credit or on credit? With a promise you are buying. You don't give any check or any money to him. You're telling, sir, I'll give you after 1 month, sometime. It's called trade terms and conditions. Okay, terms and conditions. Based on the term, we're buying it. Okay. So now in this side, resources side, what is that? Goods. Cash in hand 1,90,000. Cash at bank 10,000. Goods 5 lakhs. Totally 7 lakhs.
7 lakhs.
So dual aspect concept means one transaction will be having two aspects into it. Buying goods from Chandan Company for credit. What are the two aspects into it? One is the financial obligation is created between me and the Chandan Company, that I am having an obligation in future to settle how much? 5 lakh rupees. That's one obligation. That's one created. Another one is I'm getting immediate benefit of goods in hand, stock, merchandise. I'm getting 5 lakhs. So one transaction will be there, but two aspects will be in it. If you record these two aspects into the books of accounts, that method of recording is called as, that method of accounting is called as double entry bookkeeping. What is bookkeeping? Simple meaning. Those days we kept it everything in the books only. Keeping records, keeping all these transactions entered systematically in some of the books will be called as bookkeeping. But today, if you are saying bookkeeping, that book is there electronic form. That's it. Again, same book is kept in the electronic form. Okay, slowly we'll move into the next aspect. Okay, now look at the second equation. Assets are always equal to liabilities and equity. Now take the same example of 7 is equal to 7. In our example, 7 lakh was the resources which consist of cash in hand, cash at bank, and goods is equal to claims of 7 lakh. That is equal to 1 lakh capital. That's an internal liability. Another one is 1 lakh my friend creditor. Another 5 lakh is trade creditor. Okay. Now the resources put together, accounting point of view, call it as assets. Resource is equal to claim means it's just a normal way of expressing it. Resources, normal. Okay, if you come business term or normal term, Assets means accounting term. What is asset actually? In this particular case, how many assets we have? 3 assets. What are they? Cash in hand, cash at bank, stock,
Goods.
product, stock. Okay. If you are having 2, 3 different items, then you have to name that product. Sir, I have only one goods. Then we can simply say goods or stock. Sir, I have 3, 4 varieties of goods I am selling. Then it is not possible. We cannot just bring one category. We have to have different category. First, we'll understand this basic. Then we come to that little later. Okay. So now, what are the other side? Claim side. Claim side is liabilities plus equity. What is liability here? What is liability actually? So wait, one second. What is asset? We understood what is the logic here, but suppose I'm asking you a question. What do you mean by asset? Which belongs to us? Is it an asset
Complete
or not?
investment.
Is it
It
belonging
is
to
the
me?
capital investment plus the resources.
That's a point. There is a point. Which belongs to you. Okay. Everything belongs to me is an asset? No, that's
No.
okay. The you refers to business. He is referring that you to business only. Yes. Everything belongs to us is an asset. Is there any other condition you have to put to define asset? Yes, sir. Okay, that belongs to you, but it is not asset there. Investment, which is coming out of my investment. Okay. Any other? One more condition to be satisfied if I call that as an asset. It belongs to me. My wife is belonging to me. Why are you laughing? It's true only, no? Okay, spouses are belonging to their spouses. Okay, that's common sentence. Fixed asset is fixed asset. You're talking about stock or second example. Okay, sir, belonging to me is an asset. Belonging to me only, no? Yeah. Is it an asset? Yes. No. Sir is telling no. Married, I don't know, but okay. We'll take that first point. Asset is something. It looked like very general, but it is having its own deepest meaning there. Asset refers to anything that the further is having still more understanding of that particular sentence that generates, but I don't accept. There are some asset. Is it an asset or not? Is it generating an income to me? Until? Okay, correct. That time also it will generate some money. Is it profit or not? That don't know. Okay, so that generates money, that generates revenue. One side we can take it, but more than that, simply that is having a value. That's it. Anything owned by you. That is the point. Anything owned by us, owned by the business, that is having some value. Some value. 1 rupee, 2 rupee, 3 rupee, does not matter. Some value. That is called asset. Since somebody here touched upon a concept called fixed asset, we will move on to that also. We'll close that also now itself. So assets, how many assets we have in this business? 3 assets. One is cash in hand, another one is cash at the bank, another one is stock, goods.
Stock.
These 3 are assets, no doubt. 10,000 in the bank, it's having value, owned by me. 1,90,000 owned by me, and it's having value, hot cash. Goods having value, owned by me. So it's our asset. This sir was touching upon a concept called fixed asset. So asset can be classified in so many categories. One among them is based on the flow of that one form to another. We classify the asset into 2, fixed asset and current asset. In accounting, we classify the assets into 2 categories. Many categories are there based on this particular concept of moving on from one to another form. We can classify them into 2. One is fixed asset, another one is current asset. What is fixed asset? The intention of owning that is not to sell it out immediately. Example, this furniture owned by Dayananda Sagar University is the fixed asset. It is not kept here for the purpose of selling. Suppose same furniture, nearby if you go, okay, in Electronic City, there's a furniture shop. They are also keeping the same furniture there. There the furniture is not a fixed asset. Why?
Current asset.
Why it is not
Because
a
they are
fixed
selling
asset?
it. Because they are selling
It
it.
not
It's for
can
us
be
to be-
sold. They are keeping that for the purpose of sales. Purpose of sales. Why? It's not just a purpose of sales. The flow. Now it is a furniture. Now it's a goods. For them, it's a goods. Evening, it may become a money. It can become a hard cash. Some customer like you goes there and take one chair and gives 2,000 rupees. Now chair becomes 2,000 hot cash. Or he may give some check. Or he may tell that, sir, I'll give you next week. He becomes a, who is he now? Who are you now to that organization? You are a customer, that's okay, common customer. But you did not pay the money. Then who are you? Huh? Debtor. Debtor. The company for you is creditor. Now you got the point. Now I can use these two words wherever I want. That's what I'm just waiting for. Okay. Debtor and creditor. Debtor is a person who is having an obligation to settle some debt in future to somebody. Creditor is a person who is having a right to claim certain money, certain value from somebody in the future based on some contractual financial obligations. Debtor and creditor. Is it clear? Debtor and creditor. Now come to the current asset. So current, this is fixed asset, that is current asset. One which is changing its form from one to another very often, not by any compulsion, but by the nature of the business, but by the nature of the activities. That's called current asset. Don't bring one more concept. We'll move on. 1 second, sir. I'll just complete the sentence. So current asset is one which takes from one form to another very often or within maximum one accounting period of time, 1 year. Chair, it is there. Even though you take it very, very low level business, at least 1 year, this one chair can be sold. Expectation, it can be sold. So chair becomes money, cash, or chair becomes bank account. He's giving a account transfer. It becomes increase in your bank balance. Okay. Or he is telling, sir, I'll give you money next week. He is becoming your debtor. So one is going to another one, another one, another one. If that is a flow in the nature of the business, in the custom of the business, that assets are called as current assets. Any asset you buy and you keep it for your own purpose. Your own means the business purpose. That asset is called as fixed asset, which is going to be permanent with you, which is not expected to be sold in the near future. Our employees are asset, first of all. Don't bring your HR here. In HR, you will talk. My college will tell all my faculty members are our assets, but our names are not there in the balance sheet of the company. Actually speaking, employees are the liabilities of the company. We'll come to that liability this side now. We are just in asset, but we can say our employees are our strength, asset. We have a concept. Some people recommended and propounded accounting for human resources. Key personnel. When Narayana Murthy steps down from the board of the Infosys, the share price are falling down. Because of his age, Government of India is having some age limit for a directorship. Director Emirates, some kind of things are there. If you step down, you are going to be an advisor, that's it. Okay, you are not going to be in the mainstream of the company. When Shivnadar just coming down, when her daughter or somebody is taking over, that kind of transition is there, but accountingly we won't mind about that. We don't even care about that. We care about managing directors' remuneration. 4 crore was paid in the last year. Okay, tell me, sir, I'll write it in the accounts. How did you pay? Hard cash? I'll minus from cash. No, sir, I've given it in check. I minus from my bank account. That's it. X or Y or Z, whoever it may be. For us, money matters, not the man. Money only matters. Okay, that's a broader concept, human resource accounting. Some people are telling, like you, assets, people are assets. Yes, of course, true. Okay, principal of a college, if he is resigning and going, that kind of disturbance is there. Okay, how much he is managing the company or managing the college, example. Okay, it is there, but that is not brought into the accounting. That's it. Okay, right. So we understood what is fixed asset and current asset. The company decides whether it is fixed asset or current asset. If it is a college, furniture is a fixed asset. If it is a furniture mart, furniture is a current asset. A real estate company, Purvankara is there. Land and building. For them, it is current asset. Yes, sir. People are speaking. I think I'm not able to hear. Yeah. Those are online. Your audio is being checked now. We'll let us see. Okay. So land and building for Purvankara is current asset. Very good. Okay. For Dayananda University, land and building is fixed asset.
Fixed asset.
So you have to see
Sir.
the purpose for
Sir,
which
can
we
you
bought
hear
the
us?
business. Okay. Right. So having understood the current asset and fixed asset, let us come to the other side. Liability. What is liability? What is liability? Expenditure is liability. Forget about the examples. Try to tell what exactly meaning of liability. Sorry.
Credits are treated as liabilities as well.
A claim to be settled. Simple now. From this only we'll take. What is this? Claim. What is liability? We have two terms here, liability and equity. Liability means something to be settled in future. Like product.
Sir, is this audible?
Yes, you are audible.
Yeah, okay, sir.
Thank
Sir,
you. Yes, sir.
Sir, when you're talking about capital point,
Yeah.
so I just want to understand the quasi capital. What quasi capital refers to?
What we really refer to the term capital.
Quasi capital.
Which one?
Quasi capital, sir.
Quasi capital. I don't know. What is that? Where did you refer that? Where did you read that sentence? Read that term? Really,
Sir, I
honestly
think
speaking, I don't know. That's the answer. Now tell me, where
Sir,
did
I
you read
think-
that? 1 second. Yeah, madam. You are. Yeah.
Sir, I think the quasi capital is nothing but the equity capital.
But
I
in
think
Indian
so.
context or in any kind of accounting term, we don't use the word quasi capital. Okay, we use the word equity. Yes, sir. Oh, sir has come. Huh? Okay. Sure. Now they are able to talk. Sure. I'll check. Yeah, those who are putting your message in chat box, I'll answer to that. No worry. This quasi capital, please forget about this term. We don't use this. I don't know. I'll check it again. If it is there, I'll tell you, but we don't use it. Okay. Have you seen in the balance sheet?
So liability means sum of money, right?
1 second, sir. 1 second. Let us just put a full stop to that. We refer only capital. As of now, you take only capital. Capital is anything that is invested in the business. That investment can come from owner. That owner's money is called equity. If you take that from outsider, that's called liabilities. Or some author they will tell both put together liability. This they will tell as external liability. This they will tell it as internal liability. That usage is there. Okay, I come to the point next. Wait. Liabilities are nothing but a value to be settled, the claim to be settled by the business out to anybody in future based on some contract, based on some obligations. In our example, there are two liabilities are there. One is the owner. That owner's liability is called as equity. It's not owner's liability. Liability, I mean, payment to owners. From the company point of view, payment to owners is called as equity. The net worth of the business is called equity. I'm bringing another concept here. Net worth of the business. What is net worth? Accounting point of view, equation point of view, asset minus liability is equal to net worth or equity. What is liability here? In this equation, if we say equity and liability, this liability refers to only external liability. What is external liability? Outside of the business, we have to pay something. In our example, the trade creditor is outsider. Your friend is an outsider. The money payable to them will come under the concept called external liability or simply liability. Okay, amount payable to the owner of the business is called as net worth or equity. Okay, Yes, madam. Somebody was trying to say something. Yes. Anybody? Online. Okay, if there is no,
Sir,
yeah.
can you
Yes.
repeat
What is
the
internal liabilities, sir?
Yes, sir.
What is internal liabilities?
What is internal liability? Internal liability is nothing but the amount payable to the owners of the business. Owners of the business. Here it is only one owner, 1 lakh rupee. Okay, it can be otherwise called as equity. Today it's only 1 lakh. Suppose after 1 year, I have earned profit. The company has earned profit. 50,000 rupees, there was a profit. Assume we paused on 1 year over, one year passed on. After 1 year, I have earned a profit of 50,000 rupees. Now, how much is the equity of the business? 1,50,000. The owner's claim in the business is called as net worth or equity or internal liability. Why it is liability? You may ask, sir, how a profit is a liability to the business? Yes, profit is a liability to the business. Why? It is profit earned by the business, payable to whom? The businessman.
The owner.
The owner. In that point of view, profit is a liability.
Right.
Which liability? Internal liability or external liability? Internal liability. That is why it is going to be added in
Internal liability.
So equity refers to the amount originally introduced by the owner plus or minus profit or loss up to that date. That is called as equity. Yes.
Hello, sir.
Once again, sir, one of your classmates is talking. 1 second. Yes. What is external and internal? One who is the owning the business is internal. One who is related to the business, not owning the business is external. Okay. Yes, sir.
Sir,
Yeah,
can you please repeat that external liabilities?
External liability means any claims to be settled in future by the business to the outsider of the business. Who may be the outsider? He told no expenses.
Okay.
He may be working for you,
Okay.
but you did not pay the salary for the last 2 months.
Okay.
Salary payable is liability. What liability it is? External liability. Though he is in the company, is external liability. He is in the company, but he is not of the company. Company is not of him, not a part of the ownership. Okay. And again, expenses paid is not liability. Expenses paid. Payable is liability. Okay. I'm so sorry. You were trying to say something. Okay. Okay. Thank you. They messaged. Okay. Fine. Okay. Okay. Now you got it. Yeah.
Sir, Vijay here.
You tell me now with this understanding. Who is the shareholder? Why? Who is the shareholder? Shareholder is a name. That's it. You may have name X, Y, but all of you are student. So all the shareholders are called as common name. What is the name for shareholder? Shareholder is a name we use only for the owners of company. If you go to partnership, there we'll use the word partners. So shareholders are called as owners. So owners are internal or external. That is why it is internal liability. That is left to the company. Suppose I am earning profit of 2 lakh rupees. There is no obligation on the part of the company to decide this 2 lakh to be given to the shareholder immediately. But it is available to shareholder. It will be there in the company. If the company is closing, that time it is going to be shared with the shareholder. Company will decide whether the 2 lakh rupee can be further invested in the business or not. Otherwise, they will share that among the shareholder in the proportion of your ownership, not all equal. I might have given 1,000 rupees, he might have given 1 lakh rupee. Both of us are shareholder in the company. We both cannot ask equal claim in the profit of the company. Proportionately, the company will give. Okay, that's called dividend. The share in the profit of the shareholder is called as dividend. It is not obligation on the part of the company to give dividend. Please understand. Though the company is having a profit, it is not legally obligated to give the dividend. It is the company to decide. Who is the company? Collectively, shareholders are put together called as company. So shareholders will decide in the annual general meeting, or they will give that right, the power, the decision-making authority to the board of directors, that's called management, to decide it upon whether to distribute among the shareholder now itself, or to reinvest in the business for expansion purpose. Microsoft, you take an example, up to 1990s, they did not even given a single dollar as a dividend. The company was super normal growth. Okay, there are some companies, they will reinvest. Okay, let us not deviate much. That is fine. Financial management, you'll study in the next semester. Earning management, that's called earning management. I earned, how do I manage that? To give the dividend or to retain in the business? If you retain in the business, equity will increase. If you give the dividend, all the profit earned by the company is distributed as dividend. That time equity remains constant. It won't increase. If there is a loss, equity will decrease. Please understand, if there is a loss, shareholders are not asked to bring any money to compensate the loss of the company. There's nothing. I agree to give you 100 rupees, I given you 100 rupees. That's all. With the 100 rupees, what are you doing? Tell me what you have done in a report format. I want to read it. If you have earned profit, if you're deciding to distribute it to me. If you're incurring a loss, don't ask me to pay anything. That's a law. They cannot ask me anything to pay. Even companies eroded, fully eroded. That time, external liabilities are there. External liabilities. Say, for example, external liabilities 1 lakh, internal liability is 50,000, totally 1 lakh 50. The assets available is only 40,000. Only 40,000. What is the possibility? So you always told it should be equal, but now you're telling different. 40,000 is equal to 1 lakh 50,000. How it is possible? In book, it will be 1 lakh 50 is equal to 1 lakh 50. But we take the asset and going to the market, that time it may not be fetching the same value what you are writing in the books. So that's a possibility. Now, 40,000 rupees cash available, 1 lakh 50,000 rupees to be settled. To whom you have to settle first? External liability you have to settle first. Owners in the company is having a residual claim in the company. Residual claim. Both are claimant only. They are also claimant, they are also claimant. But the claim of the owners in the business is residual in nature. What do you mean by residual in nature? Lost. If it is huge available, everything is for you. If nothing is available, nothing is available for you. That's it. Okay. In that case, if you already paid all the money to the company in your shareholding, that time also you are not asked to bring any money from your own property to settle the debt of the company. Then what will happen to the liability holders of this business? Only 40,000 is available. Company is closed. Only 40,000 cash available. But amount to be settled for liability is 1 lakh. Here it is 50,000. What will happen now? The company is called bankrupted. The company is said to be bankrupted. Insolvency. Where the assets are lesser than the value of total liabilities. Total. Now I'm taking both together. Equity plus liability. Okay, that is called, that's a state of affair. Okay. Insolvency, bankrupt. But how are you going to settle this issue? 1 lakh is here, 40,000 is here, 50,000. How are you going to settle the claims? All assets are sold for how much? What else you are having? Only human resource you are having as an asset. Can you sell the employee? By this time, all might have resigned and went off. By sensing that your company is going to be bankrupt. Yes, sir? Who will give you, who is ready to keep some material on the fire? Already there is a fire. Who is ready to keep some material further on the fire? Is there any company is closed? Who is going to borrow? Who can borrow? Company only can borrow. Company itself is died. Company is closed. Then whose name you will buy? I mean borrow. Sorry. That is a beauty point. Owner need not to bring any money. That is a protection given by law. Now, this 50,000 he will not get it. That's the loss. Maximum loss is that much only for the owner. But here 1 lakh is there to be settled for different liability holders. Maybe one of your friend, maybe that supplier from whom we bought the materials, or maybe some bank where we took some loan. Now, proportionately, how much amount available in the company? 40,000. How much to be settled? Forget about this. This settlement is zero. This settlement is only residual claim. After this is taken care, you can come to settlement of equity. So here itself is a shortage. How much shortage is there? Here itself 60 shortage is there. Now, those who are given 1 rupee to this company as a loan or a claim will get only 40 paisa in the asset of the company, because the company is bankrupted. Who has to tell this? Court has to tell. You cannot simply say, I have only 40,000 rupees, take only 40 paisa for 1 rupee. Nobody will accept. You have to go to the court and you have to refer, sir, I am done. I have no option further. Please help me. Okay. Then court will inquire everything and they will give an order called insolvency order. Based on that, they will settle it. Okay. I think we are moving so much away from the subject. Okay. Anyway, liabilities are internal and external. Only liabilities you are referring here. This only external liability and this is equity. Okay. Next. This equation you may be understanding now. Yeah. Same thing I have written in a different way in which it can be expressed. Equity is equal to asset minus liability. Liability is equal to asset minus equity. Okay. When you say current asset and fixed asset, in liability also we have something like that. Current and fixed. What is liability? We understood anything to be settled by the business in future, called liability. If it is settlement is having lot of time, that's called long-term liability. Settlement is very often, that is called current liability. We borrowed some goods, we taken some goods from our supplier, no? That liability is current liability. He cannot wait for 2 years, 3 years. We already told him we'll give you after 1 month. So that's called current liability. Okay. We have taken a loan from a bank which can be settled after 5 years. Every year I have to pay interest only, not for EMI, only interest. That loan is called long-term loan. Fixed loan, but long-term loan. We use the word long-term loan. Long-term liabilities. Current liabilities or short-term liabilities and long-term liabilities. Okay, right. So this equation is fine with you. Now, can you tell me the equation of our own business? The last one in this form. Our business, 1 lakh I invested, 1 lakh I borrowed from my friend, 5 lakh is goods I taken from my supplier on credit. For this equation, can you tell me the last one? Liability, how much liability?
7 lakhs. Sorry, 5 lakhs.
5 lakhs.
Is it 5 or 6? 6
5
lakhs. 6 lakhs is
Five
equal
lakhs.
to 6 lakhs is equal to
6 lakhs is equals to
what's
1
asset
lakh,
value?
1,90,000 minus
7 lakh is
6,000.
asset value minus 1 lakh is the equity is equal to 6 lakhs liability. Okay, so that's how you have to understand the accounting through mathematics equation. I purposefully taken this because you may not be knowing accounting so far. So equation, that's easy. A is equal to B plus C. C is equal to A minus B, like that. Okay. So this is the accounting equation, we call it as, and this equation is possible only when we follow the double entry bookkeeping system. What is double entry bookkeeping system? One transaction will have two effects. Both the effects are recorded in the books of accounts. If so, that is called double entry bookkeeping system. What is the two effect? In example, I told you, goods are coming in. Please, I request the online students to mute yourself. Okay, goods are coming in. And I have financial obligation to my trade creditor. So the two aspects are there. Both you are recording. That's called double entry bookkeeping. Okay. Any doubt up to this? Okay. With this, I'll take you to the first slide to tell you what is accounting. By this time, you would have understood. Now, what is accounting then now? What is accounting? Anybody? How do you define or how do you tell the meaning? What do you understand by the term accounting?
Accounting is keeping the records.
Keeping the records.
Including the capital investment and the expenditure.
Okay. Anybody?
Managing money flow.
Managing?
Money flow.
Managing money flow is not, see, please understand, we are not that level. We are in very, very low level. Accountants are not in the middle management also. They are the lower cadre. We don't have anything to say in the meetings of any company. Accountants should only follow what happens. That's all. Through some evidences, we come to know what's happening in the company. Our job is just to record those documents in the proper books of account. That's all. Managing money is not the duty of Accountant. Accountant's
Sir.
duty is to, once again, accountant duty is to record how the money was managed. How the money was managed. Who is going to see how the money can be managed? Finance manager. That you'll study in the next semester in the subject called corporate finance or in the subject called financial management. Okay. Look at this meaning of accounting. Accounting is nothing but the process of identifying the business transactions, measuring such business transactions, communicating such economic transactions to the stakeholders, to the different people who are going to use that information. Okay, this is one way of defining it. Look at this another definition. Accounting refers to the process of identifying then recording. This definition is assuming that you will identify. Okay, identifying the business transaction. What is business transaction? I told you. What is business transaction? That's the example of business transaction. Don't tell borrowing of goods, buying of goods on credit, borrowing of loan. Fine. But that is the example. What is the meaning of business transaction? Any economic activity that take place in the business which involves in transfer of money or money's worth. In taking goods from my supplier, money is not transferred at all. What is transferred? The ownership of the goods transferred from my supplier to me, my business. Okay. With a promise of I'll give the money later. So money's worth is transferred. Okay. So that is business transaction. Any economic event that occurs in the business which involves the transfer of money or money's worth. If that is happening, I would identify that. How do I identify? How an accountant, poor accountant sitting in one small room, how he can identify the business transactions? Through evidences, through documents. Simple example for a document is invoice, cash invoice, receipt, voucher. Okay, these are all the evidences. That will definitely come to you. You have to record that. Look at this. Recording of such transactions, classifying such transactions. How do you classify? Income, expenditure, asset, liability, and equity. Only 5 terms we have to understand. That's all. Accounting is about these 5 terms. What are those 5 terms? Asset, liability, equity, income, expenditure. Only these 5. Accounting is revolving around only these 5. Whatever is happening in the business with regard to money or money's worth, that should definitely fit into any one of these 5 terms. Owner is starting a business by introducing 2 lakh as capital. Which one is affected in this 5? Owner brings 2 lakh rupees to start a business. Equity is affected. Equity is affected. Then asset is affected. Cash comes in to the business. And the business is giving a claim to the owner that you can claim these 2 lakh at any point in time when the business is wound up. Okay. Another example. Sold goods for rupees 20,000. Which item of these 5 is getting affected? Sold goods for rupees 5,000. Income. Another one. That is asset. Stock is nothing but asset. So asset is reduced. Income is increased. Okay, like that you can imagine any transaction. Okay, so I have to identify such transaction and I have to classify them into these 5 category, and then I have to summarize. What is summarizing? How much total of equity, how much total of income. Each and every transaction is one small part in a business. 1 year there will be lakhs of transactions. So I have to know what is the total of equity, what is the total of income, what is the total of asset, what is the total of liability, what is the total of expenditure. That's called summarizing. Summarizing the business transaction in terms of money. That's what I told you. Human resource is not a asset. It does not have any money. Okay, in terms of money, the preparation of financial report. What is your preparation of financial report? We already left some concept there. I told you what is the performance of the business. You told profit or loss. Okay. Another one is, what is your position today? The equation just now we discussed. No, income minus expenditure is equal to profit or loss. That's one equation that gives us the performance of the business. Another one is what the business is today. What is the financial position of the business? Performance is different from Position. One student might have attended all the classes, 100% attendance, 98% mark. What is position? Sir, he is simply sitting in the house, not doing anything. That is his position. Another student, 75%, 74.99% attendance, going to the dean's place 10 times and he is getting a permission of the 0.01% and he is getting 75, writing exam. Mark, 50% pass mark. He got only 50. What he is doing now? Sir, he is chairman of this company. His position. So position, of course, there's a correlation. I'm not just degrading that mark and other things. There's a correlation. Your performance decides your position. Normally, there may be exemption to that. But point is, your performance does not guarantee that what is your position today. Your position is affected by so many other factors as well. But major is performance. Okay. What is the financial position of the company? How do I know that? Asset is equal to liabilities plus equity. This equation tells me what is the financial position of the company today. So accounting is aiming at two things: to find out the financial performance of the business through that first equation. Second one is accounting is also aiming at to find out the financial position. That is financial performance. This is financial position. Financial position can be revealed by the second equation, that is asset is equal to liability plus equity. Got it? So now you can understand the definition of this accounting. It's a process of identifying the business transaction. After identifying, recording such a business transaction, then classifying all those transactions into that 5 category what we already talked about, and then totaling of that 5 category. Okay, because of this totaling or based on this totaling, you are going to find out the financial result of the business. Financial result, both position as well as performance. Okay, in the form of report. Equation, just for our understanding, I told you, we can't always change the equation. Each and every day there will be 100, 200 transactions happening. I cannot just take one by one all the equations. The equation is just for basic understanding. That equation is going to be summarized in a statement, in a report. The first statement is called as profit and loss account, or statement of profit and loss. Why for it is prepared? To know the financial performance of the company. Income minus expenditure is equal to profit. That can be prepared in a statement. Instead of equation, we write it individually. All income, we'll write sales, interest received, rent received, commission received. There are so many income. No, one of the income is sales. He told revenue, right? Revenue is including so many other things also. So we write one by one all the income in a statement, and you'll write all the expenditure in the statement. We'll compare, we'll equate the expenditure with income. If income is excess over the expenditure, then there is a bottom line that's called profit. Okay, that is prepared in the form of report. That report is called as financial statement in general, in particular profit and loss account for financial performance. Profit and loss account or statement of profit and loss. Okay, another one I told you, financial position. For that we prepare one statement. That statement is called as balance sheet. That statement is called as balance sheet. So these two statements put together called as financial report. Okay, there are some legal point of view to be looked into for the company form of only for company form of organization, because money is coming from the world, entire world, scattered. Investors are scattered, shareholders are scattered. So I am sitting in Bangalore. I have given my 1 lakh rupee to Reliance Industry Limited, which is in Mumbai. I want to know what is happening. So government is ensuring that there are a lot of rules and regulations to be followed in the form of reports. If it is a sole trading organization, same logic is followed, but rules are not at all there. You can prepare on your own, your business, your money, you prepare your own way of accounting by following the accounting system. Okay, but company form of organization has to follow the provisions given in Companies Act to prepare the reports. Basic principle is the same. Principle is the same. Accounting principle, that's equal for everybody. But how do you report it? How do you exhibit it? That is guided by Companies Act as well as by the Institute of Chartered Accountant of India through accounting standards. Please understand. Accounting standards. What is accounting standard? Accounting standards are such rules and regulations or framework created by a particular accounting board, particular country, to be followed by the companies in that particular country. Simple example, you treat one item in a different manner. One accountant who is in Switzerland or in America, he is treating the same item in a different manner. There is a subjectivity comes into picture. Please understand, accounting is not a science. I think commission received could be an income, core income. Some other people will argue, no, it's not a core income. This year you receive this commission, next year you may not receive the commission. Your business is not dealing with product of this nature of receiving commission. You are manufacturing something. So you should not include that as a core income. He may think in that way. So the difference arises. Comparison becomes illogical. Your mark cannot be compared with some other universities people mark. The system is different there. Okay, that comparison becomes illogical. Now we are in a globalized environment. I can invest in USA, USA people can invest in India. Before investing, I want to know the financial performance of the company, financial position of the company. I'll compare all the companies which are possible to be invested and I will take a decision. While comparing, the facts and figures should have been arrived by the companies in the same manner. Then only the comparison becomes logical. He found out the profit in some other way. Another company found out the profit in some other way. Now the two profits are going to be compared. This company is good, this company is bad. If I say that comparison is illogical. To avoid this confusion, we have accounting standards within India, within the country, as well as between the countries. Within the country is called as Indian accounting standard. All the companies in India should follow that accounting standard depending upon the rule. Some company may be exempted. We'll not touch upon that. Next one, internationally, companies in India, company in Europe, company in USA should follow this. Okay, except a few countries, we have a standard called International Financial Reporting Standard. International Financial Reporting IFRS. I think it was there in the 1 second. The syllabus, it was there in the beginning. Yeah, look at this accounting standards. Ind AS, look at this word, Ind AS. This Ind AS is nothing but to be followed in India. IFRS, there is another one is called IFRS, International Financial Reporting Standard. These need to be followed by the companies which are going global. Global, international level. Okay. Of course, India is also following this IFRS only. IFRS has been taken and converged with our Indian standards. That becomes Ind AS. Ind AS. So Infosys will follow Ind AS so that any investor who is coming from Europe or any other country can easily compare the Infosys performance with a peer of another country, nature of same company, IT company of other country. Okay, that's called IFRS. Okay, so IFRS is nothing but International Financial Reporting Standard. We have some standard to recognize the income, to recognize the equity, to recognize the liability. Okay, what is GAAP? GAAP is nothing but generally accepted accounting principles. That is for the subject, that is for the domain. The subject is evolved on some of the principles. Okay, current asset, fixed asset. That is nothing but our own classification. Current liability and long-term liability, our own classification. So accounting as a subject is having certain principles to be used commonly across the accountant. Okay, with some clarification requirements. So that is called GAAP. We have Indian GAAP, we have US GAAP. Before the introduction of IFRS, people are following. If you want to go globally, we will convert our books of accounts into US GAAP format so that people from other country can understand our accounting methods. Okay, so this is about the basics. Okay, what's the time now? 11:50. So we need some break. So this is a basic. After coming the next, 5-10 minutes break, we'll start with recording. How do we record the books of accounts? I'll tell you. Okay, thank you. See you again after the break.
Hey.
Okay, good morning again. Am I audible to those who are online?
Yes, sir.
Thank you, thank you, thank you. So just we studied about the meaning. What is accounting? I hope fairly we understood the meaning of accounting. Okay. To put it in single sentence, it's a process of identifying the business transactions, recording those transactions in the systematic books of accounts for the purpose of knowing the financial result of the company, financial position of the company. Okay. Right. Bookkeeping, I already told you, bookkeeping means only recording part of it. Accounting is a broader term. Okay, bookkeeping is part of accounting. Okay, only the recording of business transactions. Accountancy is a broader term than that of accounting. The principles are the guidelines, postulates, concepts which guide the domain of accounting. That's being that's being talked in the subject called accountancy. I'm so sorry. Is it visible?
Yes, yes, it is, sir.
Yeah. Okay. So this is what we discussed before the break. The objectives of accounting. Two objectives I told you. One is to find out the financial position of the company. Another one is to find out the financial performance of the company. In addition to that, we have two more. That is to just maintain the records. Without maintaining records, we can't do this process. Okay, we can't write the exam without attending classes. Okay, so like that, every day we write whatever is happening. Then final output is the report of the accounting, that is financial statements. Okay, then to make the information available to the various group of people who may be interested in knowing about the accounting data. Sorry, investors. Okay, investors maybe.
Auditor.
Who is that?
Auditor.
Auditor may not be interested in knowing about your financial data. Auditor is providing the financial data, right? Auditor is an employee of the company, or is a supporting person.
But the external auditors like.
One second. So auditor is an independent authority. He is supporting us in making the reports. See, at one fine morning, I come and tell you this is wrong, that is wrong. You would have done like this. You would have done like this means you will get irritated and time is lost. Instead of that, when you start doing something, I can come and tell you this is the way you can do it. It's easy for me to check in the later days. Both of our time is saved. Okay, so auditor is guiding us in the very beginning itself. Each and every company will have an auditor. Okay, PricewaterhouseCoopers was auditor for Satyam when Satyam was coming out with the problem. Okay, PwC was the auditor, right? PwC was the auditor. Okay, so auditing firm or auditor, we have two types. Auditing firm, PwC, also these kind of auditing firms are there. Independent auditors are there. Okay, so depending upon the volume of transaction what we have, and depending upon the capacity of our financial strength, we can choose an auditor. So auditor is guiding us how to make accounts. He will not be daily sitting in your place and doing everything. Our own accountant will be there. Internal auditors will be there. Our own accountants will be there. They are guided by the system. That system is created by the auditor whom you are hiring for. Okay, they are not interested about your financial data. They are the generator of financial data. They are helping us to generate. Okay, who else may be the interested parties of the owners, investors,
Partners, stakeholders, lenders.
One second. Who is that first one?
Partners.
Partners are not there with us. We are company form of organization. Stakeholders.
Yes.
Okay, 1 second. Those are online, one by one. Yes. Please. Stakeholder, investor, owner. Then
Lenders.
Okay. Is there any difference between lender and investor? Can't the lender be coming in the category of investor?
Can be, but investor could be a partner as well, right?
Okay, 1 second. When you list out something, you have to follow a certain uniformity. If you list out in a broader category, list out all the broader category. If you list out minute level, then we can go with the minute level. So investor is a broader category. It includes so many people. So we can go with the minor category, that is owner of the business. Don't confuse, owners are owner. It can be a partner, it can be a shareholder, depends upon the organization. Owner is a common term. Owner, then creditors. You told lender, no? I'm just changing the word creditor. Lender is a very common term. Creditor is accounting term. Creditor, then we have a slide for that. I'll show you who are all the interested parties to use the accounting information. This and all we discussed. Yeah, look at this. We can classify them into two. The users of accounting information, we can classify them into two. One is internal people, another one is external people. Okay. What and all you told so far that has been recorded here. One is owner, another one is the management. You can ask me a question, sir, who is management and who is owner? Owner and management are separated from each other in the company form of business organization. Please understand.
Excuse me, Professor, are you showing
Yes.
some slides?
Yes, yes. Is it not visible to you?
No, it is not visible.
No.
It's visible for us, sir.
Visible for you?
Yes.
You're
I
not
mean,
for-
yeah,
can see the
it's visible. Page number 1.
I
Only
think
one item is not managed.
Okay. One second, sir.
We're in the first page of this slide, not on the topic.
It's visible, but the slide is not sliding.
Online people, please wait. We are working on 1 second. I hope it is okay now.
Yes, sir.
Yeah, okay.
All right. Yes. So owner and management. Management is the board of directors, CEO, CFO, COO, these people. In company form of organization, ownership is separated, divorced from management. I am the owner of Reliance Industry. I can claim I am one of the owners of Reliance Industry Limited since I have a share. But I don't go to the office every day of Reliance Industry Limited and do anything of the management. On behalf of me, we appoint somebody. They will take care of the management of the business. Okay, they need not to be a owner of the company. They will just director, paid employees. Okay, so they need the accounting information to know about their own performance. Okay, their own performance. What is the company is, what they have done. Next, employees, they want to know about the company's performance because of their salary, because of their bonus, all these reasons. Next, the external users, the creditors, just we discussed. Before they give money also, they need your accounting data because from that only they will understand what you are, whether you are eligible to borrow or not. Okay. Yeah. Then financiers, creditors, trade creditors. Financier means financial creditors. Okay, I have taken two different names there. Or you can take trade creditor and financial creditor simply. Then potential investors, those who are attempting to invest in your company, they want to know what you are. How are you doing? Okay, what is your financial position? Consecutively, are you earning profit or not? What is your net worth of the business? Then the consumers, they want to know about what is your financial status. The consumers, are you giving any product by exploiting them? What is your cost? What is your sales? What is your profit? Shareholders may be interested in knowing about your high profit. Consumers, if you are having high profit, they will think that you are exploiting them. That's true, right? What are conflicting interest? Next, tax authorities would like to know what you are doing. Are you paying the correct tax or not? Please understand in this context, two books of accounts will be there in the companies. One is tax authority, they will prepare, they'll be asking you to prepare the accounts based on the Income Tax Act of 1961. But Companies Act is telling you to prepare some of the books of, some of the ways of preparing books of accounts. So to pay tax, I will prepare one profit and loss account. What is the profit there? For that, I will pay tax. To my shareholder, I cannot show that. Okay, accounting, based on accounting, I will prepare according to Companies Act 2013, I will prepare. Based on that only, I will give dividend and everything. So what we are all seeing in the newspaper, in the website of the company, in the annual report of the company is profit and loss account and balance sheet prepared in the guidelines of Companies Act, not by the Income Tax Act. That is only internal purpose. Okay. Government, overall government is also interested in knowing about what is happening in your business. Okay. To have some regulations or to check whether you are following the regulations or not, or you are becoming a monopoly in the industry, to check that. Okay. Then research scholar students like you may have a project to do with, or you are interested in knowing about how the companies are doing, how the accounts are maintained. So you may be interested in the accounting data of the company. Okay. So these are all the users of accounting information. This we already discussed, branches of accounting, right? Financial accounting, management accounting, and cost accounting. Then limitations of accounting. What is limitations? Limitations means some of the drawbacks which the financial accounting does not include. Something you told me, HR is not accounted. Like that, we have some limitations. Major limitation is it records only the financial transaction, monetary transaction. Qualitative aspects are is very honest. This employee is very honest. Even 1 crore is found on the company without notice of anybody, he will take and give it to us. Honesty, okay, but what can I do? Nothing. I can't record anything honesty. 1 crore is lost, I will write it in the loss. If 1 crore is found, I will write it in the found. That's all. I cannot appreciate him in the through books of accounts. Honesty, his own qualifications, his experience, all those things. Non-monetary transaction cannot be recorded in the books of accounts. I appointed X for the salary of 20,000. Okay. Are you paying salary? Yes, paid. That I will write it. That's all. Okay. So these are the limitations. Recording only monetary transactions, it is ignoring time value of money. You know anything about time value of money? Salary paid 20,000 rupees in January 1 is not just equal to salary paid on 31st December. 1 year gap is there. Inflation will be there. 20,000 of January 1st may not be equal to the 20,000 of 31st December. 1st January 20,000 is more value than that of 31st December 20,000. But in accounting, that concept is completely ignored. How much you are paying, that much will be recorded. That's all. It does not recognize the inflation or time value of money. Recommendation of alternative methods. So many places we have alternative methods. Simple example, fixed asset we discussed, no? Fixed asset. We discussed about fixed asset. In fixed asset, we have a concept called depreciation. Suppose you are buying a machine today for 1 lakh rupee. You are buying a machine for 1 lakh rupee. Okay. How much you have to minus in the cost to find out the profit? Profit is equal to income minus expenditure. 1 lakh rupees you spent to buy a machine. How much you have to take in a expenditure group to minus the expenditure from the income? Are you understanding what I'm talking about? You bought a machine for 1 lakh rupee. Is it expenditure or not, first of all? So how much you have to minus from the income? 1 lakh. If you do so, that is wrong. Machine is not expenditure. Buying a machine is not a expenditure, as you understand. It's an expenditure in general. In general, we have 2 types of expenditure. I told you, 5 terminology, 5 terms. Understanding that 5 terms to the core, that ends the accounting. Now we are understanding which one? Expenditure. We know what is expenditure. Anything spent, expenditure. Now we spend some money, 1 lakh rupee, to buy a machine. I am a manufacturer of some product. For that, I need a machine. I bought it by spending 1 lakh rupee. This is an expenditure. Accounting also expenditure, normal also expenditure, but accounting does not accept this just an expenditure. Expenditures are 2 types. 2 types. One is revenue expenditure. Don't confuse. Sorry, what is revenue expenditure? Revenue is different from expenditure. Both are contradictory to each other. We are dealing revenue expenditure. There is a concept. Revenue expenditure. Another one is capital expenditure. What is revenue expenditure? Revenue expenditure is one which is incurred by the company in a regular recurring basis, which is giving you some kind of mileage, some kind of selling capacity immediately. We're buying a raw material. It's an example for revenue expenditure. Payment of rent to the premises. It's an example for revenue expenditure. Payment of salary, revenue expenditure. Buying of machine is not a revenue expenditure. Why? If you buy 1 lakh rupee worth of machine, are you going to use that 1 lakh rupees immediately in the 1 year? The machine is going to be there for some more years. The lifetime of the machine is to be determined. If it is 10 years, the machine can be used for next 10 years without any further spending on that particular machine. Then the life of the machine is 10 years. Then how much the value of machine you are using for 1 year? 10,000. How did you get it? Total cost of the machine divided by year of life of the machine. The 10,000 is called as depreciation. We technically call it as depreciation. What is depreciation? That portion of the fixed asset. Able to connect? We already studied about fixed asset. That portion of fixed asset which is going to be charged towards the revenue of the company. What do you mean by charged towards the revenue of the company? Minusing from the revenue. It is going to be included in the total cost. The total cost is going to be minused from revenue to find out the profit. So charge to profit means with the tune of that much, the profit is going to come down. If you minus all the 1 lakh, you are doing wrong. What is the mistake you are doing there? You are treating a capital expenditure as a revenue expenditure. Okay, then what should I do, sir? The 90,000, the left out portion of the machine at the end of the first year is going to be your asset. Total 1 lakh is asset, 10,000 you used it. How I know 10,000 only I used it? It's a kind of methods. So why I'm telling this point, look at this limitation. It gives lot of alternatives for different methods. This is one way of calculating the revenue portion of the capital expenditure of a machine, 10,000. I may say it's wrong. There is another method called diminishing balance method. This is straight away 1 lakh divided by total value of asset divided by number of years of asset is equal to the value of asset used for that particular year, 1 year. Okay, there is another method. So next year, how will you calculate the depreciation? Next year, again, if you calculate the same amount of depreciation, that is called straight line method. Every year, 10,000 rupees for next 10 years, the asset is nullified at the end of 10th year, the value of the asset will become 0. But it may be sold for some value at the end of 10th year also, scrap. We can sell it out. So there is another method to be calculating the depreciation, that is written down value method. First year 10,000, okay, that method is also accepting. Second year, don't take again 10,000. Now what is the value of the machine at the start of second year? 90,000. On that 10%, it is equal to 9,000. There's another method. So like this simple example, we have a lot of methods to be considered and deciding one method which is suitable for us. So that is another disadvantage of the account. It does not tell this is the method you follow. It gives option for us. Okay, that's all. Another recommendation of alternative methods, restrain of accounting principles. It's always having so many accounting principles you have to follow, and there are some legal formalities coming into picture depending upon the country. Okay, then recording of past events only, that's advantage, but again that's become a disadvantage also, limitations. It is not predicting anything future. It's only a post-mortem report. We say in accounting, it's a post-mortem report. What happened, we are writing it. What is going to happen, we don't know. After happening, you tell us, we write it, that's all. Problem of allocation. Allocation problem is there. How much accurately I can say? Suppose university is conducting some programs. BBA is there, MBA is there, BSc engineering will be there. What is the total cost of this entire building? How much cost of the building can be allocated to a particular program? It becomes difficult. Okay. Non-maintaining of secrecy. We are asked to publish our accounting statement in the public, so it is not maintaining any secret. Okay. Tendency of secret reserve. The accountant, if allowed to do, they can make any secret reserve also in the accounting that cannot be known to others. Secret. Just increasing the depreciation will result in decrease of profit. Decrease in the depreciation will result in increasing of profit. Satyam, what is the problem in Satyam? They have done like this, no? What is the problem in Satyam? Anybody was working in Satyam that time? Or anybody is working now? What is the company name now, Satyam?
Tech Mahindra.
Yeah, Tech Mahindra. Anybody is there in Tech Mahindra? Nobody? Okay. So I can say whatever I want. It's not like that. So 10,000 fake employees were found in the payroll of the then Satyam. Okay, 10,000 fake employees. And showing some fixed deposit receipt in the balance sheet asset side. Fixed deposit receipt is an asset, right? By this time you will understand. We deposited 1 crore rupees in State Bank of India. They will give a receipt, FD receipt. Okay. So much of value are shown in the balance sheet asset side in the name of FDR without having the real deposit in the State Bank of India. So secret accountant is accepting, auditor is accepting, means these kind of things are possible. Okay, that is why people are telling PwC also to be put into blame. So native auditors, they're telling PwC, a conglomerate like this, they're coming and auditing. Okay, but our native auditors, individuals, our own firms, Chandan company, Rajesh and company, 3-4 auditors will be together and they will be having a partnership firm to run a auditing business, auditing service. Okay, they are ignored. So that kind of they were talking about much in that time. Then later on, it was just gone in the, mass. It is not given any importance. So that kind of possibilities are there to have some kind of secret reserve or secret profit, which is not known to the public. Only when the account, only Ramalingam Raju coming out and telling the fact. By the time nobody knows what's happening. For your information, Satyam was the awardee of Golden Peacock Award just a year back before the scam come into picture. coming to the existence, coming to the open space. What is award? That award is for corporate governance. You are a good student. That's the award you're receiving in the yesterday. But today you are having some inquiry for some kind of activities, small practices, something like that. That's the example I can give. So secret reserve, secrets are possible. Only accountant knows what is happening in the company. He can manipulate. You might have heard a joke. There is an interview for an auditor. The interview panel is asking a question. 2 plus 2, how much? He is telling 4. He is telling 4. What is 2 plus 2? 4 only. No. What is this? A simple mathematics. I'm a CA auditor, chartered accountant. What is 2 plus 2, sir? 4 only. Everybody is telling 2 plus 2, 4. Nobody selected. Nobody got selected. There was one gentleman. Okay, gentleman. Okay. He is telling 2 plus 2 is equal to, he's asking another question, sir. Can I have a question to you? Okay. How much you want? How much the answer to be? He was appointed. Colloquially, it is a fun story kind of thing, but that's the reality. Auditor is doing that kind of job. Within the framework of law, we do all these possible things. So that becomes secret reserve possible and other malpractices possible. That's our limitations of accounting. But people are trying to address all these limitations. See, when you say some kind of law, there are some people, okay, who knows that particular law, they will try to do something in the framework of that law only. Then immediately the governance will again come and check that particular problem, they'll address again. That's what alteration again and again. We are moving forward in the full governance system. Okay. So these are all the limitations. Let us not talk about the limitations. Come to the, yeah. This we discussed already. This is the basic concept according to which the entire accounting is there. That 5 concepts we studied now. All those things before you decide whether it is equity or whatever it is, we have to think about this, then we can decide. Okay. Concepts and conventions of accounting, based on this only the entire recording of books of accounts are taking place. First one is business entity concept. Business is separate, owner is separate. I just now told you in the morning, I mean before the break. Business is separate and owner is separate. How? What does it exactly mean? I can take anything from my own business. I have all right to take back. I have all right to give it to the business, but that need to be accounted, recorded. Okay, I can't just go and tell, okay, my son is just having a bike. He is going to fill the petrol, give the 500 rupees. Accountant will give. I am the owner. He is giving. This is sole proprietorship. There only the account, there only the business and businessman will have a thin line of differences. In company, suppose if I'm going to Reliance Petrol Bank and telling that I am the shareholder, please fill the tank. What you will see? Are you mad? That's a question that petrol bank person will ask. You may be a shareholder, go to the board meeting, attend whatever you want. That's okay. But here it's you are also one of the customers. But if it is a sole trading organization, my own petrol bank I'm having, if I go there, definitely that, because he's going to get a salary from me only. Definitely he's going to fill the petrol bank. If my friend also comes, he will fill that also. Okay, but that need to be recorded. Sales, how much sales? This need to be in the sales. Okay, then that should be having a drawings. My money in the business need to be brought down. The sales of the company should be increased to this much. So that concept we call it as business entity concept. And going concern concept, we treat the business is always to be there. No business is started for the purpose of closing in the near future. It only gives the concept of accrual and outstanding. What is accrual and outstanding? In my example, I told you in the morning that I am borrowing, I mean, I take goods on credit basis. Why he is giving? He is believing that I'm going to be there in the future as well, that he can get back the money from me. That is called outstanding. Accrual means I deposit money in the bank. Interest I'm going to get only once in 6 months or once in 1 year. But after just 3 months over, my interest has been already earned, but I did not receive. When the bank will give, maybe agreement after 6 months or once in a year. But that does not mean that the 11th month only I'm earning the interest. I'm earning the interest very first day itself. For 1 day, interest is earned after 1 day is completed. So that concept is called going concern concept. Company or business is there for all the years. This concept and convention is only for accounting, not only for company. Okay. Next one is accrual concept. Just now I told you, accrual means the due earned but not received. Okay, interest earned but not received, commission earned but not received, salary earned but not received for an individual. Okay, Next, money measurement concept we already discussed. Everything can be recorded in the books of account provided only when that can be measured in terms of money or money's worth. Honesty cannot be recorded. Loyalty cannot be recorded. He is very loyal. Let him be. But I can't record anything in the books of accounts. If you give in appreciation of the loyalty some increment, then that I will record. That's it. Next, dual aspect concept. I don't think I need to explain again. We already explained. Each and every transaction is having a twofold effect into it. Both the effects are recorded. If you do so, that concept is called as dual aspect concept. Dual means two aspects. Benefit giving and benefit receiving. Okay, next, cost concept. Any BCom student would like to try this cost concept? What is cost concept? I will record the transactions only at the cost what I spent. I am buying nearby piece of land for 1 crore. But really, it's worth only for 90 lakhs. How much I would record in the books of accounts? 1 crore. Because I paid, for me, it is costing 1 crore. Suppose real market value is 1.2 crore. You bought it for 1 crore only. That time also, what should you write? The land in your books, in your balance sheet. Okay, one clarity here. We classified the entire items into 5, right? Can you recollect? Equity, liability, income, expenditure, asset. These 5 are going to be there in the 2 statement. What are the 2 statement? Balance sheet and income statement. That is called profit and loss account. Okay, which are the items to be there in balance sheet? 3. What are they? Asset, capital, liability. Capital means equity. Asset, equity, liability. These 3 are to be there in the balance sheet. And the 2, income and expenditure, is going to be there in the profit and loss account. Now look at this concept which I'm talking about. Cost concept. So in the balance sheet, land is an asset, right? In the balance sheet, how much I would record in the name of land? In this example, 1 crore only. Even though the value of the asset in the practice, in the market, maybe 1.2 or maybe 0.9 crore, I have to record only how much you spent. Sir, I given commission of 10 lakhs, then your asset value should be 1.1 crore. Okay. Next, accounting period concept. I can't keep on recording the financial transactions. I have to stop. And I have to take the stock of the things. That means a period. That period is 1 year, 1 financial year, 1 fiscal year. It can be a calendar year. It can be a Dasara year. It can be any year, but it should contain 12 months. If you have any legal requirements of that country, then you have to follow that. In India, they are making it now, 1st April to 31st March, compulsory. Before that, we were allowed to do our own accounting year. But now they are telling, because filing is important. Filing, reporting, return filing, everything confusion is arising. So government is going towards some kind of uniformity. So that financial year, April to next year, March. Next, legal aspect concept. We can't write anything in the books of accounts which is illegal. Sir, I given 10,000 rupees to the, what you can say, the assembly secretary. I mean, Vidhan Sauda, I went to discuss with some of the minister. P of the minister took 10,000 rupees from me. If you write there, that is leading to controversial. Some diaries, you might be remember, Hinduja brothers diaries. Long back, I don't know whether you remember. Long back, we all see the news in the present time, then we'll forget. People are having poor memory power. That's advantage of the people who are doing some crime or some kind of activity. We forget it. Hinduja brothers diary. They written how much money has given to so and so people. It will be lakhs or crores, no? So they want their own account, personal accounts. So if you write anything, that is illegal. You can't do illegal business. If you do that, it cannot come to the books of accounts. Other expenses, sundry expenses, miscellaneous expenses, some item may be there in the, but it may have some kind of audit objection also. Okay, sometime, but you have to manage. So writing off those things are illegal. Matching concept, nothing but you are matching with the, I think I have one. Yeah. Slide for this. Okay, I don't think so. I have a detail for that. I have some picture. I think I deleted it. Okay, so matching concept means you are matching the income with expenditure to find out the profit or loss. Okay, profit or loss. The next concept is Yeah. Next concept is which one? Realization concept. You can't write something which you did not realize. Sir, my customer is going to buy next month. He has given an order today. That is not recorded in the books of accounts. Have you sold it or not? No, sir. Then don't tell me. Invoice is raised means I will write it. Raising of invoice is the evidence for sales. That's all. Whether he is paying money or not, that is ignorable. Accrual concept. He is going to pay the money. He is signing, he will pay. That claim need to be recorded. But sir, he is coming tomorrow to Bangalore. Tomorrow afternoon he is coming and buying something from me. Okay, wait for tomorrow afternoon. After afternoon, you tell me the invoice. Based on the invoice, I will record. So that's called expenditure as well as income. Mainly income can be realized, can be written in the books of accounts only when it is realized. It does not mean that you have to receive the cash. The legal contract should have been signed. Next, objective evidence. Very, 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 very important concept in accounting. Each and every transaction need to be recorded in the books of accounts based on undisputable objective evidence. What is objective evidence? Some substance will be there, something will be there as a proof of the transaction. Proof of purchase, maybe invoice. Proof of payment to 10,000 fake employees. I told you, what is the proof for that? What is the proof? You are writing in the books of accounts, salary paid 1 crore this month. What is the proof for that? Pay slip. Okay. In HR payroll, there will be a enrollment of your name. Bank transfer, the latest case is a bank transfer. Those days, just books, accountants was there. Accountants means, I don't know, you are all in this particular era. You are not signing for your salary, no? Are you signing? Some long back, it might have been seniors maybe knowing it. So when colleges will maintain on accountants, it was very accountants. Attendance is different. Accountants means a stamp, revenue stamp they will affix, and you have to sign on the revenue stamp and you have to draw the salary in cash. Okay. Fifth, when I was starting my career, every month, fifth, principal is very much big person on that day. Principal is a god for us that day because he's going to disperse the salary. There is a concept called disbursement of salary. Now on a click, it's credited in all the employees of the account. See, I work for Christ University in a regular basis. On the last working day of that month, 5 o'clock or 4 o'clock, the salary will be there in the bank account. On one click, the transfer itself is done by the employer, not by the banker. There was a day we have to go and give the list of employees, and with the amount of salary transfer, they will do manually, the banks. But nowadays, that power is also given to the employers if you are having a large number of employees. On one click, salary is disposed. So the bank statement is the evidence for salary payment. So evidence, objective evidence should be there for each and every transaction. If you write anything without that evidence, the transaction is not at all taken into consideration. That's considered to be a fake transaction. Okay. Voucher. What is voucher? You are just getting a books for the students. There is a unloading process. Some 2 laborers are doing it. 10,000 are paying for them. Okay, huge number of books. 10,000 are paying. They will not give you any receipt. They are giving 10,000 rupees after the work is done. They will not give any bill for you. I mean, receipt for you. What you do? You prepare one document. You ask them to sign in that. Then that becomes a evidence. Voucher. That's called voucher. Receipt prepared by our own self and getting a signature from the receiver of the money is called voucher. If they are the good organization, what they will do? They will keep a printed material with them. Okay. After they receive money from us, they will fill everything and they will sign and give to you. That becomes a receipt, cash receipt. So that's an evidence for the transaction. So these are all the accounting concepts. Look at this side. To support this, we have some kind of customs which we are following for ages. That's called conventions. Convention. First convention is convention of disclosure. You have to disclose all the material fact through the books of accounts to the stakeholder. You should not hide anything. Material fact, disclosure. I'm changing my policy. Last year I followed depreciation of straight line method. This year I'm following diminishing balance method. Follow, no problem. You are having accounting policy. Okay, you are following it. But you have to let the stakeholder know what is the change in the accounting policy. Disclosure of material fact. Next, convention of materiality. Materiality here refers to same. Both are similar to each other. Disclosure recommends you to disclose all the facts and figures to the stakeholder. Here it is. Materiality means knowing or not knowing about that fact is changing my decision making capacity. That kind of facts are called as material fact that need to be definitely disclosed to the stakeholder. Okay. Next, consistency. You have all right to change your policy, no problem. It's your company. Within the framework of legality, you can change your policy, no problem. But while doing so, you should be at least have some consistency. Sorry, please mute your mic. Those who are online, mute all will be there, no? Okay, I think, yeah, they already muted. Okay, no problem. That's okay. Right. So consistency. Today I'm coming and teaching you. Next week, one more teacher is coming and teaching you. Third week, another teacher is coming and teaching you. Then finally, you'll decide, okay, accountancy is, that's it. We can just put an end for accountancy. So consistency means what? Last year I followed on policy. This year you have right to change. Nobody stops you within the legal framework, within the Companies Act, within the rules. But while deciding so, you have to think twice, thrice. Definitely it is demanding to change, you can change it. After changing it, at least you have to consist for some period of time. It is not every year I'm changing my accounting policy. Then finally, stakeholder will get confused what policy you are following. Okay. Next, last one, conservatism. What is conservatism in general English? Conservative. He is very much conservative. What do you mean by that? Conservative. Old way. That is simple understanding. Old way. What is old way then? Conservative. Huh? Same passion. Okay. Anything else? Don't want to change anything. Okay. Rules, regulations, they will follow. Okay.
Traditional.
Yes, traditional. Yeah. The old one is bringing in another word called traditional. Conservatism means don't foresee the income, but foresee the losses. What I mean by this? There is a case pending against our company. Somebody filed a case. Okay, or we filed a case against some other person claiming some damage, claiming some compensation. You are definite, your lawyer is telling you will get definitely 1 crore as compensation. The lawyers are like that. They will be telling you are definitely giving 1 lakh, getting 1 lakh, 1 crore rupees, sir. Give me some 5%. That's enough for me. I'll argue and get it done for you. Okay, you can believe in these words, but you cannot take that to books of accounts. Next year, I'm going to get 1 crore. This year, only I write it in the books of accounts. That's not possible. That is called conservatism. I want to be traditional. I want to be conservative. I want to foresee the losses. Suppose somebody filed a case against me and he is claiming a damage of 1 lakh rupee. A workman, compensation act is there now. He just got an accident in the company machine. Okay, he cut the hand, left or right, something like that. He is claiming 1 lakh rupee, but you are not giving it. He's going to the court of law. That time you have to make a provision for this 1 lakh, because at any point in time in future it may be decided against you. That time you cannot reduce the profit of that year. So you have to provide a provision for, what is provision? I'm introducing a new term to you. Provision means charge against profit. A loss or expense that is going to take place in the future. I don't know about the sure about that, but I make some readiness for that. That's called provision. The another word is reserve. Reserve is the amount of profit. Reserve is against, out of profit. Provision is against profit. You understand the difference? To the tune of provision, profit will come down. To the tune of profit, reserve can go up. If I have a profit only, I can make reserve. If I have a provision, my profit will come down. So if there is any possibility of such losses in the future, I have to foresee that. I have to estimate that. I have to make myself to accept that in the current year itself. That's called conservatism. Simple meaning, foresee the losses, provide something in the accounts, don't foresee the income or profit in the future. Let it happen, that time I'll record it. Shock comes to me with the happiness, it's okay. Suddenly A happy news is coming to you. You are shocked. That's okay. But suddenly a bad news coming to us, that gives a shock. That is not acceptable, not taken in a normal good spirit. Okay. So that is the concept of accounting. So these are the various conventions and concept of accounting which need to follow while preparing the books of accounts. I think we are late by so many concepts. I think I thought of finishing it this full today itself, but it is not possible. Anyway, no problem. Strong base is given, that I believe. And these are all the concepts, you know, right? Transaction, capital, share capital, liabilities, asset, equity or net worth, capital expenditure, revenue expenditure, we discussed. Depreciation, we discussed. Debtor, which debtor? One who has to pay to us in future. Bills receivable. What is bills receivable? Don't confuse the word bill and invoice. In accounting, normal colloquial term, what you're using in your life, bill is equal to invoice. It's called as invoice. You go to a cafeteria, you order something, you are getting a bill. That is not a bill in accounting. That is only called invoice. Invoice is a document which contains the details of the purchase or sales. What is then bill here? Bill refers to a document which is an evidence for future payment. In our example, I bought 1 lakh, 2 lakh worth of goods from my supplier. He is ready to give me for that for 1 month time period. During that period, he has to believe me, no. Even chief minister telling it is not my signature. After signing, some chief minister is telling it is not my signature. Somebody forged it. But how do we believe the transactions? So he asked for some evidence. Who? The supplier. For what? The amount payable. That document is called as bill of exchange. He writes the detail. I'll sign that. The copy is with him. One copy will be with me. For him, it is bills receivable. For me, it is bills payable. In common, that document is called as bill of exchange. When it will happen? It will happen only at the time of credit sales. Credit sales. Okay. So that is called bill of exchange. Bills payable and bills receivable. Goods and merchandise we already discussed. Okay. Income, revenue, profit, loss we already discussed. Okay. Voucher we discussed. What is drawings? It cannot be there in the company form of organization, but it can be there in the partnership as well as in the proprietorship. The amount taken by the owner from the business or the goods taken by the owner from the business is for his personal use is called as drawings. Okay. Temporarily he is taking back 10,000 rupees is taking. Next month he will give back the money to the company. Okay, to the business. Next, turnover means sales. Okay, discount means concession in the price. There are two discounts here. One is trade discount and one is cash discount. What is trade discount? The concession in the price of the product if you buy on a bulk basis. You all together going to your shop and getting for some uniform and asking for some concession. 5,000 rupees, a blazer and coat shoot, everything put together. You are asking for 4,500. So we are buying 100 shirt, 100 or 1,000 we are buying. Why don't you reduce the price? From the list price, they are reducing some amount for your invoice price. The difference between the invoice price and the list price is called as trade discount. Suppose you are buying 1,000 rupees worth of list price product for 950 rupees. How much you will write in the books of accounts? 950. Why it is so? What concept it is? What concept? Just we discussed now. Cost concept. Based on that, we are writing this. Okay. Now he will also write 950 only in the sales book. Okay. After 1 month, you got a credit period of 1 month. But within 15 days, you are going to the company and paying the money. Sir, I bought it from you. 1,000 sets of uniform, worth rupees 4,500 each. Now I am coming 15 days yearly to settle the money. Why don't you give me some more concession? Already he was giving you 500 rupees this concession. That is appreciation of what? Appreciating your bulk purchase. Now, what is the credit you are having? You are having a credit of yearly payment. He was giving you time 1 month, but you are settling it within 15 days. You are asking for that also some kind of reward. He is giving you some 100 rupees discount. Don't pay 4,500, pay only 4,400. That 100 rupees is called as Again, discount, that is called cash discount. Cash discount is emerging at the time of settlement. Trade discount is emerging at the time of bulk purchases. Sales, purchase, bad debt. What is bad debt? What is debt actually? Debt is something which you are going to collect from your debtors, customers who bought on credit basis. If he is not giving, he is absconding, he is not traceable, that time that becomes bad debt. Good debt, doubtful debt, bad debt. One who is always coming and settling you, that is good debt. One who is doubtful, whenever he has money, he will come and appear and give you money. Otherwise, he will not appear. That is called bad debt. He is not at all going to pay. He is absconding. Then it becomes bad debt. Bad debt is a loss. Okay. Good debt is profit. How come it is a profit, man?
Oh, it's not.
Bad debt is a loss. Okay. Good debt is
Income.
we have only 5 items now. You tell me all the 4. One is clear, right? Bad debt is loss. Loss. See, profit or loss. If you include that, then we have 6 items. 5 items are
Current
there.
asset.
Sorry.
Current asset.
Okay. You are more clear, but at least it is asset, not income. It's an asset. Sales is an income. Sales is emerging into a bad debt. I mean, debt if he is not paying it today. That is an asset. Sales is income. Debtor is asset. If debtor is turning into be bad, then it becomes loss. Okay, this we discussed. What's the time? We are already exceeding time. Okay, just to remind me when.
Another few minutes, sir.
Okay. Yeah. Now we are into core of accounting. Okay, it may some kind of disturbance or confusing for you, but so far whatever you discussed is clear to you. Now you'll be in a position to understand easily. We have to record the books of accounts, right? We have to keep the books of accounts. For that, we have some rule. Entire transactions are going to be classified into 2 categories of account. I already told you. We are going to give the name for the account. Name, heads of the account. Okay, before this, I'll explain one more concept. Then it is easy for you to understand. Normally, I will do that. I don't want to immediately bring you some rules. Yeah, this slide. Very, very important. The entire framework of accounting is being explained in this slide. If you understand this properly, then you'll be having an idea to understand the concept, what I'm going to tell you in the next class. Okay. Look at this. This is a transaction. The flow chart. Transaction. Can you give an example for a transaction? Buying something. Good. Buying furniture. Okay. Fatima Furniture Limited is buying furniture for rupees 5 lakhs. It could be a transaction. Any other example for transaction?
Selling goods.
Salary paid. Yeah, to the employees. Okay, yes, madam.
Selling goods.
Selling goods. Okay, selling goods. Selling
Borrowing
goods is
money.
just selling goods is just what you can say. Not clear, right?
Yeah.
You have to tell fully. Selling goods.
Selling goods to
for rupees
Ram.
2 lakhs.
Rupees
To okay,
2 lakh,
Ram.
yeah.
Okay, on credit or for cash. This is only important only in the classrooms. In reality,
Purchase raw materials.
1 second, sir. In reality, how do you understand? Invoice will be there. Invoice raised in the name of Ram to Miss Ram and Enterprises. Then seal is fixed, cash received. Then it becomes invoice come receipt, cash invoice. That is going to be evidence. That is going to be a base for recording. But in academic classrooms like this, I can't provide you all those documents. So we have to understand this concept very clearly. The sentence is very important. Okay, sold goods to Ram Enterprises for rupees 50,000 on credit or for cash or collecting check. That kind of information should be there. Without the term cash is there, that you have to understand that the transaction is credit. Sold goods to Ram for rupees 50,000. What does it mean? We did not receive any money from Ram Enterprise. It's for credit. It's just an academic understanding. In reality, we will see the document. Yes, madam. Somebody is telling the example for transaction. Online, yeah.
Purchase raw material.
Okay, already goods and raw material, I think both are same. Okay, you are buying raw material, you bought goods. Fine. Next. Good.
Mr. He deposited 10,000 to HDFC Bank.
Deposited rupees 10,000 into HDFC Bank. Okay, good.
Borrowing money from Raj of rupees 5,000.
Okay, borrowed money. Anybody?
Taxes paid.
Sorry?
Taxes paid.
What is that?
Taxes paid.
Taxes paid. Okay, taxes paid. You are a real citizen of India. Taxes paid. I am really worried. Okay. But anyway, dividend paid to shareholder. Very good, sir. Very good. Dividend paid to shareholder. So like that, there are n number of transactions. So we have to identify such transaction first. In exam, we'll give you this. In reality, it's the duty of the accountant to check from the various documents, which will come to his desk, okay, or in the pop-up in the today's ERPs. I think anybody is working in accounting department. Anybody? Because without asking that, I am telling you so many things. Anybody? Okay, so you saved me, right? So you in ERP, it will pop up. I'll tell you something about that. Okay, we have not experienced it working, but we know how it is working. Okay, fine. So in the ERP, it will pop up, or in the classroom, we'll give you in the question paper, or in the books, it will be there. So from that, we have to take the transaction either to journal or to subsidiary books. This is a basic. We told about recording of business transaction. That is happening here only. Transactions are recorded either in journal or in the subsidiary books. Journal is a prime book in which chronologically we are recording all the transactions date wise. But in a single day itself, there may be 500 transactions happening in a company. I cannot write all the 500 in a single day. So what I will do, division of work. I will classify the entire transaction into some category. Each and every book will be given to one person. He will maintain that book. Those days. Nowadays, it's computerized. Even 1 lakh transactions are there. In a single click, it can be recorded. But those days, it was not possible. Only one accountant will be there. Or even though 10 accountants are there, only one book will be there. Journal is only one book. It is a chronological order to be maintained. So writing one after another, 1,000 transactions are there means in a single day, one person cannot write all the transactions in a single book. Even if he needs some labor, we're giving you, but in the same book only written. 2-3 people cannot write in the same book. So we are classifying the books into different category, and that is called subsidiary books. If the transactions are too many in number, where we have some problem in maintaining journal because of time constraint, we go with another method called maintaining the books in subsidiary books. Sales book separately, one person will be there. He will take care of sales book, purchase book, cash book, okay, bills receivable book, bills payable book, okay, and then purchase return book, sales return book, and then journal proper. I repeat again: sales book, sales return book, purchase book, purchase return book, cash book, bills receivable book, bills payable book. The last one, journal proper. What is journal proper? In the 7 books, if you don't have the opportunity to record, we don't have the chance of recording any such transactions, will be recorded in just a journal along with the subsidiary books. That journal will be called as journal proper. If you have only journal, that's called journal only. No other books are there. In the place of so many subsidiary books, I mean, in addition to all the subsidiary books, if you maintain one more journal to make yourself eligible to write any transaction exempted from these 7 books, that book is called as journal proper. Okay, let us quickly understand what can be recorded in the 7 books. Purchase book, it's very much evident. We can record only, that's okay, but 2 conditions. Only credit purchase, and another one is purchase of material. It can be raw material or it can be a merchandise. If you're a trading business, you'll buy and you'll just sell it. You don't process it. That also to be recorded in purchase book. If you're a manufacturer, you will buy raw material. That also to be recorded in purchase book. But provided it should have been purchased for credit basis. Credit basis. Okay. If you buy anything on cash basis, where will you record?
Cash book.
There was a book called cash book. We'll write it there. irrespective of item what you are buying. Only condition is, have you paid money? Either check or hot cash. It will go to cash book. Okay. Then second one, our supplier has given some defective goods. We want to return it. Purchase return book, we will write it. When you can return the material, provided you bought it for credit. If you bought it for cash, he is least bothered about your returning. He will accept, okay, send me. But if you are buying it for credit basis, if you are sending, he is very much careful because the money due from you, you have to give. You will give after minusing this. Okay, so purchase book, then purchase return book. Third one is sales book. Now you tell me what's the sales book? Say, writing only those transactions which are sales in nature of what? Merchandise or goods. That too on credit basis. If you sell goods on cash basis, it will go to
Cash book.
Now you tell me, if I total the purchase book entries, can I get the total purchase? No. Only which purchase? Total purchase, I can't get it. So we will maintain one more book, one more place that is called ledger. Purchase ledger. It will contain all the details of purchases irrespective of cash and credit. From the journal or from the subsidiary book, it will go to ledger. From the cash book, if there is a purchase, that will be recorded in ledger of purchase. If there is any purchase from the purchase book, that will also go to ledger in the name of purchase. So purchase ledger, if you total it on a given day, that total is going to be your total purchase what you made. Okay, then come to sales and sales return. You understood. Cash book, you understood. Every transaction, any transaction that results in payment of money or receipt of money or receipt of bank account or payment of bank account, that will be recorded in cash book. Simple example, sold old furniture for cash. Where will you record it? Cash book. Sold old furniture on credit.
Sales book.
Sales book. Credit, which book?
Sales book.
Sales book.
Sales book.
Sold old furniture. Suppose Dayanand Sagar University is selling old furniture or any company selling old furniture. What is old furniture? Unused asset. That's asset. Which sales book will not record the sale of asset. It will record only sale of goods. Then where you will record it? Which one? Others. What is others? Did I tell you any book called others? Yes. But I told some other name. That name is?
Journal.
Name is journal proper. Others. Correct? But name is journal proper. We'll just write a journal, but that becomes a journal proper because it's included. It's also coming along with subsidiary books. Okay. So sales book, sales return book, purchase return book, cash book, journal proper is over. Two more books. That is bills receivable and bills payable. Just now I told you what is bills receivable and what is bills payable. If that kind of transactions are taking place in the business, that will go to the respective books. Take my example. I got goods from my supplier for 2 lakh rupees on credit basis. Okay, on credit basis. He is asking to sign in a document. That document is called bills receivable. Okay, I have given. Purchase is one transaction. That's over. In addition to that, he is asking to sign in one document. That's another transaction. So that I will write it in bills payable book in my company. In his company, he will write it in bills receivable book. He can do one thing. He can take that bills receivable, the document, to the bank. If he needs money immediately, he will take that to the bank and he will give that right to the bank. So take this document. So and so has to give me this much of money on this date. This is an evidence. You take from him on the due date. You give me right now money to me. We give you that money right now. The bank is ready to give, but not the same amount. They will reduce some value. Suppose 1 lakh bill is there. They will give me 99,000. This is called discounting of bill. Discounting of bill. Money is arranged immediately. See, the company cannot go to any bank to arrange money. It is arranging simultaneously. He is having a right to claim from me. That claim is being transported to the bank. Okay, where you will write this? Discounting of bill of exchange. Cash book. Cash book will have two columns. One is for bank, another one is for hot cash. Both will consider as cash only in cash book. That's called columnar cash book, multi-column cash book. Okay. I think we can stop up to this. Next we can discuss in the next class. This is a journal, format of journal. Okay, just 2 more minutes. This is a format of journal. Okay. To record in journal, we need some rules. For that only that heads of account comes into picture. Okay. I'll show you the format of ledger. Then we can close it. It exactly 12:30 or more? I mean, 12:37. Okay. I'll just show you the format of ledger. Yeah. Ledger concept is not clear. Okay. Ledger, see, summarizing. There was one concept in the meaning of accounting. Summarizing. I want to know how much total value of purchase. I can't come to know from either journal or from subsidiary books. If I maintain only journal, I have to go and check wherever there is a purchase, which are the date purchase is there. I take the total, that will become a total purchase. Instead of doing that manually, we prepare a place. Look at this. Ledger is a place or a statement in which all the items of the same particular heads of account is being recorded, totaling. I think I have that. I just take 1 more minute. Yeah. This is all we do in the next class. If I show the format, it will be clear for you. No, this one. Look at this. This is a ledger. What we do here is, in journal, we will have date-wise whatever is happening. There won't be any grouping. There won't be any classification. Irrespective of the transaction, we just write chronologically. Whenever salary paid, return. Rent paid, return. Cash received from customer, return. It goes on like that. If you want to know how much cash is available right now, journal will not tell you the answer. Journal will write wherever cash paid, wherever cash received. But in ledger, I'm sorry, in ledger, I think it is, which one? I'm very poor in that. Can you do that? There, okay, okay. Double click. Yeah, thank you. Okay, so in this, you will be having the particular item, all the details. Wherever cash was paid, according to the date wise, from the journal, we'll refer and we'll write it here. Cash paid. Wherever cash received, we'll write this side. From the journal, I will refer when cash paid, for whom or for what it is paid. I will write it here. Whenever cash received, from whom, for what, I will write it here. So if you match these two, you will get the what? Balance. Always the debit side. Okay, what is debit side? This side is debit. Next class we'll talk about debit and credit after seeing that account, rule of accounting. Okay, so let us stop this. Ledger is a tool which is helping us to find out the summary of a particular heads of account. It could be sales, it could be cash, it could be purchase, it can be rent. How much rent totally I paid? I can't come to know from journal. I can come to know from ledger, rent ledger, cash ledger, bank ledger, something like that. Okay. So with this, we can stop for today. I request you one small thing, that is, if you are new to accounting, or of course you might have studied, but now you might have forgotten. So what you do is go to NCERT textbook. You know, CBSE, Central Board of Secondary Education, CBSE website. In CBSE website, you will be having 11th standard. Don't think that, sir, we are in the executive MBA. You are telling to read that 11th standard textbook. Nothing wrong in that. Just refresh. Okay, 11th standard textbook you take and read the basics of accounting. Okay, 2-3 chapters. What is accounting? What is journal? What is ledger? All these things. Just read whenever you are free. You keep it in your phone. Whenever you are free, just take a WhatsApp message. You read that. Whenever you have a doubt or some words are not known to you, understandable to you, note down. Okay, and just bring to the class, or we create one WhatsApp group. In that only post it. Anybody from the class itself can reply if they know. Otherwise, I will reply. Okay, that could be learning. Once this concept is, you are not learning only from the classroom. We are meeting only very less time. Okay, 6 hours. Okay, that girl was my student actually. Last class, she was telling that before. I don't know the fact now only. 60 hours we will do. But we are doing 6 classes, 6 into 3, 18 hours. Okay, so we have to be get connected always. So don't mind. You create one WhatsApp group. Post whatever it is, known or unknown. Don't think that somebody will laugh at me or somebody will think something I don't know anything. No problem. Okay, you ask. Somebody knows, they will reply. Otherwise, I will reply. Okay, so that is the learning we have to make environment, not only in the classroom. Okay, thank you so much. See you in the next class. Yeah. Assignment I'll upload in the next class after telling you. Thank you so much.
Thank you,
Online,
sir.
any doubt?
Thank you, sir.
So many messages. Any message I did not answer in the online?
Thank you, sir.
Okay, thank you. Thank you.
Thank you, sir.
So much.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Is anybody gonna create group?
Yeah, somebody can create a group and
Yeah,
it's
somebody
better, I
please
think.
do that.
Probably we can add here in the chat box or want to be added. Like,
okay, with your
Like
permission,
a group
I
which
will send the meeting
consists
now.
only of students, not any other lecturers.
yeah,
So
yeah,
that we
yeah.
can
Yeah,
share
yeah.
whatever we
Yeah,
want.
we actually can create a group of section B students, so that will be helpful.
Yeah.
Like for any queries, clarification, we can post there. So
Yes, yes, exactly.
Okay,
Yes, it will better.
you can chat later. Okay?